Affrm, Sentinel One, Workday, Alta, so many of these different names. If we're ready to go, I think we have some guests in the background. Ladies and gentlemen, please let me switch my background here. Welcome the great and powerful Amit Kukreja.
What's up, man? How are you?
Doing very well.
This is a fun day. Biggest market cap increase in Nvidia's history.
It's a big one. It's crazy the shift in my mood whenever we were dropping. We were like going down to like 203. At 230, I'm walking with such a strut in my steps. My chest is puffed out. I feel like a different man. Same earnings.
Yeah. Well, I mean, going to 205 yesterday was kind of ridiculous. I think it's just doing what people thought. It's still below where it was last week, but it makes sense, right? It actually makes sense. And so I know it's selling off a little bit right here into the close, but I mean, it's nice, bro. $480 billion in market cap added in a single day. That's bigger than Microsoft a couple weeks ago, bigger than April 2025. And looks like the street's actually giving it the love that it deserves.
You're quiet at times. I don't know if this is the mic doing its thing, but came in quiet a little bit there.
Okay, that should not be the mic. Should be better. Let me know if it still caused that issue.
Okay.
Okay, cool. So we've got Iren, we've got Mrvl. I think those are the big ones. Is it decided? Iren is what people want to listen to?
Iren, clear winner. Clear winner. So I did the poll. It was like, I think 60% Iren, another like 30% Mrvl, and like 10% was Rbrk.
Rbrk, you have Rbrk in your draft. It'll be a big one to see that one with software as well.
It has moved a bit. The draft is getting kind of crazy, man. The Steve's coming in with really, really hot picks. Honestly, I'm worried about you as well. You've got a lot of names that if the outlook for Nvidia is true and they believe 70+% growth, I'm pretty sure AMD is going to do quite well. SanDisk, Bloom Energy, Google, a lot of those names, like they're likely to all do very well.
Yeah, I think you're running away with it right now because you've got a decent chunk of software exposure, which is doing really well. I don't know if the names that me and Jason and Chris picked are actually going to reach the levels they picked when we actually did the draft, which is why we're in bottom place right now. But it is what it is, right? Like Nvidia is going to have to really execute on their growth, and then Bloom, SanDisk, Google, all of those guys are going to have to follow. But the obvious opportunity this year outside of the semis over the past couple months was software. And thankfully, a lot of us actually bought a lot of those software names in our real portfolio. Zeta hitting 30 today, Shopify 155, Palantir finally green year to date. I mean, just a massive, massive move for software today. Ironically, the software Salesforce, the software move is happening on the day of the best semiconductor company's earnings, which is kind of
wild.
Right.
Okta, I think, is up almost 30% is what they might close out here today. Salesforce up 23%. Is that one of the hottest days that we've seen on Salesforce in like the last 10 years?
Yeah. Well, best since 2020.
Oh, wow. Okay. Yeah.
No.
I didn't see why Smartbird was up. I don't know if you saw anything on that.
The freaking AI company?
Yeah, just in the middle of the day, it just shot up. They're up 16%. I don't know if this is some Wall Street Bets thing.
Yeah, I see zero headlines on this, but it has to be something. So we have Iren, Mrvl. I'll put a poll right now in my chat of what people think outperforms. I think for Iren, the obvious question is, can they get a deal? For Mrvl, I think, Jensen said they're going to be a $1 trillion company. Google bought 7% of the company. The optic space is obviously very important. So I think they will need to execute. The problem is they're reporting on a day where software is having the most motion. So I think Rbrk might have a good chance of leaning into that motion, although it is up a lot going into the print. Do you have any thoughts on Afrm? I know you follow that company from a fintech perspective.
Yeah, I mean, I've not kept up with Afrm in a while. Klarna, I think, got destroyed recently. They said weak consumers, but some of that was European customers as well. I don't know where Affirm's going to come in at, but they definitely have separated themselves from a lot of the other BNPL names. I don't know. If I had to take a bet, they're likely to beat their numbers just because Affirm is, I think they have a lot of execution credit. They seem to be doing much better than their other competitors. But the comments from Walmart and the comments from Klarna has obviously got to give some concern to the name. If you want to put up your list as well.
Yeah. Let me just share this real quick. I think you might have talked about this already, but for those that are just joining, you did have Trump obviously try to pump Micron here. I mean, this news is 4 days old. So the fact that he's posting about it today means that, you know, he's trying to give it a little bit of a nudge right here. I am surprised so much of the semiconductor supply chain is taking a hit today, or at least not making a move. It's just weird. I have tried to come up with some theories for why it shouldn't be that weird, but do you have any perspectives on why the memory names are getting hit after what Jensen said? It's almost like the street's not believing him, or is it just software is running so much, something needs to go down and that ends up being memory?
No, I mean, I looked to that comment that he made during the call, and he said something along the lines of, you know, I have to be honest, this memory constraint is lasting longer and was much larger than we initially anticipated. That, if you remember back to some of the interviews with Jensen, he said every bottleneck, you know, doesn't last more than 3 years. And now he's saying with this memory bottleneck, actually, this one might be a little bit different, and the stock is down. So I have a position in Micron. I took out my cost base a while ago, which was like roughly 30% of my position. I'm thinking about putting it back in. Just potentially, not doubling down on my position, but just potentially adding to it while we're still under 1,000. If we end up growing by 70% next year, like Nvidia says, I just don't think that there's a possibility that many of the different components, photonics, memory, and all these names are going to stay extremely depressed. Not that they haven't already gone up, but their earnings have justified that. So I don't know.
I agree. It is a bit weird here. DRAM is not at my entry price yet. I was kind of hoping for it to be like in the low 50s to buy again. But I mean, if they actually take it there based on some of this price action, I would be a buyer as well. I don't think I would be too afraid to take a shot at it if it gets down to that multiple compression. Zeta right there, 30.28, massive day. Congrats to those in data. Zeta, that's up 7%. Nebby is still green on the day, which is nice given that it was red in the morning. Palo Alto Networks. The cybersecurity stuff is a little crazy to me, how much these guys are up. I mean, Palo Alto Networks is now trading at almost 300 times earnings.
Yeah,
I get it. It's important. I don't know if it's that important for that multiple, but I think there will be an opportunity to get those names at a cheaper price. But, you know, to be honest, a lot of the semi names had crazy multiples and the software names have been dead all year. So the fact that a software cybersecurity name is getting a good multiple, why not?
Well, what about some of the commentary that the CEO ended up talking about the neoclouds?
I don't think he's talking about CoreWeave, Nebius, and I think he's talking about these companies in the private markets that are raising at $2-3 billion valuations just to supply compute, like Allbirds, for example, which is effectively neocloud. I think he's saying that's not going to exist when we have actual supply-demand imbalance back in check.
Yeah, he did say latest rounds or something like this, like indicating he's talking about private companies.
Yeah. But I mean, he is right. A lot of these smaller neoclouds, they're not going to be able to be competitive with the bigger ones that are out there. Elon just tweeted, I expect SpaceX revenue, did you see this? To be 3.5 trillion at around or during 2033, by 2033.
Sorry, could you say that one more time? What? How many trillions?
Why did he just randomly tweet 3.5 trillion by 2033 SpaceX revenue? Is what he just posted.
1 times 6-year forward sales or less than.
Okay, someone tweeted a Morgan Stanley estimate and then he commented. Okay.
I mean, yeah. His long-term price or like guidances have not always been on time.
3.5 trillion. Nvidia's going to do how much this year? It's like 450 or something?
Yeah, 410.
410, okay. So Elon's saying in the next 7 years, and Elon this year they're going to do 50. So it's going from 50 to 3.5 trillion.
But what will Nvidia do if that ends up being the case?
Oh, that's the question, right? That is the question. BTC 80,000. That's been holding it as well, which is nice to see. That Bitcoin has been. Where did the chart go? Yeah, it just like disappeared.
Yeah, crypto's moving. It was like a little bit of an all-asset rally earlier today. I was feeling a little bit Good. Nvidia might close up 9%.
Dude, today's been a good day. Today's been pretty much everything. Even some of the semiconductor names that are kind of flattish, they're still a little green. Like,
it's literally what I texted you. I was like, nah, I'm excited for it to be up 9% rather than 2% because it's been down all week. And we might end up closing up 9.
we might, and this would be when it was at 229.50, it was the best day in history for Nvidia. I still think it's pretty much the best day. Let me just do the math real quick. Even if it closes right here, it would be up. Yeah, it would be the best day. 442 billion in market cap added.
What's the last record?
440.
440.
Meta 571. Micron getting a nice candle right into the close at 933. Let's see if that can actually go green. Again, Mrvl and Iren, I think, is what most people care about today. We got a bunch of other earnings. Iren's at 5 p.m. We'll be listening to them. I really don't care which one we listen to. I'm okay with either or, but I think a decent chunk of you want Iren. So we can listen to that. We have Workday in the software space, SentinelOne, cybersecurity, Rbrk, software, Afrm, fintech, Ulta with makeup. The other makeup names have done really well. And then Iren and Mrvl, I think, are the. I think Iren's also at 420, so there might be a little bit of a delay. Mrvl, we should get pretty soon.
I think we just play it by ear. If Iren's down 2% and Mrvl's up 13%, or vice versa, we just choose whichever one is has the best report that might end up saying something fun during the call.
I'm totally fine with that. Totally fine with that. Netflix. So did anyone? There's a bunch of people streaming the GTA 6, like first look right now. Rockstar Games even tweeted that you're allowed to stream it with their permission, or without their permission if you add commentary. Take-Two right there has been kind of stuck all day. Got a little bit of a bounce right 5 minutes ago. Now it's kind of right back down from 237 to 233. But who knows? Maybe that's kind of the next name that could take off, even from a meme perspective. People just bid it up to bid it up. But if there's real good earnings growth from GTA 6, maybe that's part of the reason they can get a bid. Palantir 186, nice 5% day. Broadcom back to 370. I didn't even see Broadcom all day. That's been a sleeper. Been making a nice little move. Robinhood up 1%. I mean, overall, I think it's been one of the best days in 2026 for the overall market, getting some momentum across the board.
Yeah. Do you think that Nvidia deserves to be up a Palantir overnight?
After those earnings? Yeah. Yeah.
It's just pretty 100%. Crazy to see at this scale, though. It's like just wild.
I did not say vice versa. I said vice versa. I did not say vice reversa. Tanner, can you say the word strength?
Strength.
Okay. Anyway.
To be fair, I said vice versa, but I did it on purpose because I love getting your chat fired up.
Oh, I was like, there's no way I said that. I was like, but yeah, you say the G in strength, so congratulations. You say it like the rest of the world wants you to say it. Yeah, no, Nvidia deserves to be up this market cap. I mean, these are unbelievable times we are living in. Unbelievable numbers we are seeing. A growth trajectory of 70% when the street thought it would be 40. Like, that alone should have this thing up even more than it is today. And, Tanner's been preaching the thesis. Tanner's the reason I got even into Nvidia last year at around 120, 130. So you've been dead on. And it's just a question of if the street's really going to take it to that 250 level by end of year. But it seems like it's possible.
Yeah. There's the upgrades from Wall Street, though, are quite intense. I don't know where you fall on that in terms of the price action for next year. I think a lot of people think that the valuation should be much higher than where it is, but they just have a problem with it being a certain percentage of the overall S&P 500. That seems to be the barrier. A barrier that I don't know if I've ever even contemplated in the history of investing. In my last year, or 10 years, I don't think I've ever thought, hey, well, this company would make up too much of the S&P 500.
Right.
But
I mean, it is a problem.
A lot of analysts say $300, $350, $400 is where it should be 12 months from now.
I mean, look, I agree with them, but the analysts can say whatever they want. At the end of the day, the market's got to be ready for Nvidia to be that big, and it's probably not ready yet, especially with all the fears of inflation, Iran war, rate hikes, but I think eventually we're going to get there. Rocket Lab getting a nice little pump going into the print, 2%. We got 20 seconds until the market closes. We're going to get the results. For most of these companies, I think Iren, there's about a 20-minute delay. But once we get the results, we will give them to everybody. Thank you all for being here. It's been a relatively strong day across the board. One of those days where it reminds you why you invest in the first place. And happy that everyone is here with us as we end out the day. Thursday, August 27th, 4 p.m. The stock market is now closed. All right, we are done for the day. I don't know where Neil is. Jose can't make it because he had something. Neil didn't give us an excuse for why he couldn't make it.
I just realized you don't say anything at the market close. You don't say like, close your laptop. You say wake your ass up during the day. There's not like a
close your laptop.
I don't know, bro. What do you do? All right, go back to sleep. The market is now closed.
If you have something good for me to say at market close, I'll say it. I just, in the morning, it's like, wake your ass up. And after the close, it's like, all right, we got to see what we get, Take a nap.
Yeah.
Close your positions. Close your
time to go put on some Bohemian Rhapsody and relax for the rest of the day.
I was listening to it while I was walking to get a manicure and pedicure about an hour ago.
So I sent Amit a text and I said, hey man, I don't know if you've listened to Fleetwood Mac or not, but like, do you think that's a flex?
What do you mean? No, it's not a flex. It's just like, look, nails look nice. That's all it is. My feet feel great. Like, that's all it is. Anyway, Mrvl 242.65, as that is up 0.5% after. Okay, we got Autodesk. We have Autodesk. Tanner, you can share the screen.
Sorry, brother.
Autodesk is down 1%, actually up 0.5%. EPS 330 versus 262, that's a beat. Net revenue 2.05 versus 2.01 billion, that's a beat. Operating margins 41 versus 39.3, that's a beat. Billings 1.85 versus 1.81 billion, that is a beat across the board. Stocks down 1.6, it was up 6% today. So this one might give a little bit of it back given the run it had. Workday, which almost got acquired a couple of weeks ago, that's down 1.2%. EPS 275 versus 261, that's a beat by 5%, up 24% year over year. Revenue up 12% year over year, as that is also a beat by about 3%. Actually, revenue is flat. It came in line. EPS is a beat by 5%. Revenue up 13 year over year. EPS up 24% year over year. Workday pumped a lot a couple of weeks ago, so it might be priced in, but that stock's now down 2%.
I don't have Affirm's numbers yet, but they're up 1.7% in the after hours so far. Kind of ran into the close a little bit, but no numbers as of yet.
Yeah, don't have Mrvl either. My chat on the poll, we are looking at 49% of you say Mrvl, 40% say Iren, and then 4% say Afrm, 8% say Rbrk. Don't have any of those numbers either yet.
This is for pump?
Yeah.
Pump or dump?
Yeah. Well, like which one would outperform? So 49% say Mrvl, 40% say Iren. Iren, we don't have it yet. That's up 1. Mrvl's up 1. Don't have any of those. Workday's down 4. Autodesk down 6, giving back the entirety of the move today. Rbrk's not up yet, but that is down a little bit.
Mrvl and Iren are like tied right now. It's kind of funny seeing the pre-numbers reaction.
Do you have a take on which of those two could do better?
I mean, the neoclouds have done extremely well after earnings. Even the the stock reaction, let alone the pure numbers. Both CoreWeave and Nebius put up extremely good reports, whether that was better depreciation schedules, Ampere's going out 9 years, longer customer relationships, or short-term deals being extremely well priced. So I have a good feeling about Iren. That being said, we're not really expecting things to pop off this quarter. It's sort of next quarter where I think the revenue is about to inflect.
I think that's fair. I think that's very fair. I think if they announce a big deal, it could run even further, but yeah, probably will take that kind of extra evolution of contracted power capacity. I just think because the other neoclouds have moved so much, they've got to give us something here for people to be excited.
Yeah.
I mean, last time they ran to 70. They stayed there for a few minutes, but they did run to 70. So maybe there's something that could get it moving. We still don't have any of those numbers yet. Mrvl, I think we got it. Mrvl Street wanted 2.71. We came in at 2.74 billion. Stock is flat. EPS 33 cents. Adjusted EPS 94 cents versus 93. That's a beat. Stock's up 3 now. That's a quick flip from red to green. Revenue with 2.74 versus 2.71. Gross margins 53%. Net income 308 million. The guide is 3.1 versus 3.0 billion. So they beat on the guide. They beat on EPS. They beat on revenue. Not massive beats, but they are beats. And Mrvl right there up 1.72%. Ulta is guiding up to $29 a share for the fiscal year EPS versus $28.80. So they're beating on the guide. Alf and Estee Lauder also had some really good earnings.
Rbrk's top and bottom line look great so far. I don't know if you have those numbers just yet. Stock's up 6.
I don't have Rbrk yet. I have Sentinel 1. That is down 10. That's a beat by 14% on EPS, 8 cents versus 7 cents expected. EPS is up 100% year over year. Revenue's up 21% year over year, 291 versus 290. That's a beat by 1%. So you have a beat on the top and the bottom on Sentinel 1. It pumped today with the cybersecurity names. It's now down after hours. Rbrk, wow. They beat by 400% on EPS. 20 cents versus 4 cents expected. Oh my gosh. That's up 12%. Revenue 427 versus 387. That's a beat by 10%. EPS is up 767% year over year. Revenue's up 40% year over year. Gross margin 78%. Wow. I mean, that's a big one from Rbrk. The stock got to $40 in the SaaS apocalypse. I mean, a lot of these names just, you know, they're not being vibe coded away. I think that's the story here.
Sentinel 1, the complete opposite. This is why I am not a fan of buying the second names or the catch-up trades or something like this. There is real execution differences between CrowdStrike and Sentinel 1. They service similar customers, but even as CrowdStrike had all the outages and the whole Uber Eats, coupons and everything, that whole fiasco, that was Sentinel 1's opportunity to take over, and they didn't even budge. They weren't able to get sales teams out there, offer, I don't know what the problem was, but Sentinel 1, they're just not selling the same. And this is the problem with buying catch-up trades.
No, I think that's fair. There's a whole bucket of cybersecurity names. The two that are really winning are CrowdStrike and Palo Alto. And, you have to be really confident that the catch-up trades, there's space for them for the market to care, So that is a fair point. Ulta beat by 6% on EPS, 655 versus 619. They beat by 2% on revenue. Revenue is up 9% year over year. EPS is up 13. We don't have Iren yet. Ulta, these makeup names, dude, crushing it.
Mm-hmm.
It seems like that part of the consumer is not struggling when it comes to buying makeup.
Yeah.
Ulta right there, still green.
Lulu's doing poorly. The makeup names are doing well.
Yeah, I think Lulu has earnings next week as well. Mrvl's down 1. Trying to get some deeper analysis on Mrvl right here. Not sure what the street isn't happy about. Let's try to pull up their website. Mrvl did beat. It's a very small beat, though. It's not really a massive print. CEO, Mrvl delivered record second quarter fiscal 2027 revenue, up 37% year over year. AI-related bookings remain exceptionally robust as we expect our revenue growth to accelerate further through the remainder of this year. Given the strength, we are again raising our revenue outlook. We are seeing broad-based strength across our data center portfolio, including strong demand and connectivity and a significant acceleration of our custom business beginning in the second half of fiscal year 2027. We look forward to showcasing these drivers in our event next month. Yeah, the numbers look great. They're just not massive beats. The stock also did run from 206 to 250 recently.
These Rbrk numbers are fantastic. They said they raised their outlook. Growth came in at 38% year over year. ARR came up 33%. Like you talked about, adjusted EPS more than 5x'd the Wall Street expectations, but that guidance came in higher than expected. Free cash flow on that guidance came in higher than expected for full year and next quarter. It just looks like a slam dunk across the board. CEO said we are in the early innings of the AI acceleration opportunity.
Yeah, and Rbrk is identity-based security, right? No, I'm getting that mixed with Okta.
Well, there's definitely some identity stuff, but I think it's like data recovery.
Yes, they're in the cyberspace, but they're not like endpoint security. Data protection, backup, cyber recovery. Well, this is if this is tangential to Mythos and they have good numbers, I mean, it makes, and this thing fell 50%. Yeah, you've got a nice name right here that's getting moved. Iren, I think we got it. Stocks down 1. Revenue they beat by $2 million, 137. Stop laughing. 137.
Well, I got the numbers too. It's just dashes.
Adjusted EBITDA they're guiding for 245 million. Where's the EPS? It's not even.
Yeah, like how do I read this?
They were expected to lose 61 cents. This happened last time, bro. Last time their EPS is calculated in a weird way. So we were like waiting for like 30 minutes to get the actual EPS. Bitcoin mining revenue, 578 million. No one cares about that. Until I hear about a deal, none of this stuff matters, to be honest.
Yeah.
And I don't see anything about a deal yet.
I'll bring up the IR page, see if something comes up.
Yeah, I see nothing there either. Afrm and Shopify launched Shop Pay installments in Australia. Okay, so you got some BNPL coming to Australia there.
Yeah, they have a huge relationship together, Afrm and Shopify.
Rbrk down 3% now. Obviously, this name had a big day, so giving back some of the gains after hours is not that crazy, but it's down 3%. Nebius and Micron down after hours. Wow, everything's kind of getting hit out. Even Ulta losing all of it. Mrvl down 3%. Workday down 4%. Autodesk down 5%. Nvidia's down a little bit.
Yeah, Rbrk's down 5%.
Yeah, that I don't know why, but they were up a lot in the day, so I could understand them going down.
Yeah, it was I think it closed at an all-time high.
Yeah. Iren, okay. Iren signs new multi-year AI cloud contract with leading frontier AI lab. I don't know if that's a new headline or they're talking about 2026 capacity is sold out. Iren says $4 billion of ARR contracted for 2026 capacity, $1 billion of ARR operating today. Iren new multi-year contract with leading frontier AI lab. What the hell does that mean? Like, what's the lab?
It's probably Anthropic. But they had a deal with Anthropic, right?
But also, why wouldn't you say that? Like, why are they being secretive about leading frontier AI? Like, am I crazy for asking for the name of the company they're signing a deal with? Because if I am, I won't say anything. But like, what is going on?
Yeah, it must mean it's not as might not be as frontier as possible, you know?
Like, genuinely, am I crazy for saying we need to know the name of the company that you're getting a $4 billion deal? Like, is that insane? Is that asking for too much? Because if it was Anthropic, I feel like they would want to say it, or OpenAI. It's up 1%. We still don't have EPS numbers. Yeah, I'm still not getting any deeper coverage here, guys.
Yeah.
Nothing's on the website either.
It was a little while, though, last time, right? I think it was like 440 that we ended up getting the real results.
That's true. They probably have an NDA. I mean, if that's what we want to go with as the reason, okay. I just don't get why Nebius and CoreWeave don't have all these NDAs either. You know, like this, at some point, the CEOs are getting a ton of shares with zero performance attached to it. Like, they need to show something that gets shareholders to be excited, not some mysterious company they signed a deal with. Like, not even trying to pick on them. I'm just like, I feel like it's not crazy to ask for this. I ran up 1.3%.
Wow, dude. Rbrk from 121 to now under $100.
Why though? Like, you know, I was talking about in the morning, software is not really where the risk reward is anymore. So it's fun to, you know, see it go green and think everything's okay. But Rbrk was $40, right? So it's made its move. And now the risk is that it was $42 in April. So the risk is a lot higher than the reward here. You know, any little thing that either goes wrong or the street doesn't like, 120 might just not be easy to justify. Meta, that's down after hours a little bit. Nvidia's down after hours. We have Gap earnings. They beat by 8% on EPS, 52 cents versus 48 cents expected. Gap is down 2. Revenue, they missed by 1%, 3.65 versus 3.6 billion, 3.69 expected. Revenue is down 2% year over year. EPS is up 20% year over year. As Bitcoin loses 80 slightly. There is a short float on Iren of 30%. That is fair. So the shorts have been in this name. Let's get some more coverage on Mrvl right here. And then we'll keep going.
Of 274, so slightly higher than the street. Same for Q2 non-GAAP gross margins. Data center revenue also slightly ahead at $2.17 billion. Management says AI-related bookings remain, quote, exceptionally robust, and they expect their revenue growth to accelerate further through the remainder of fiscal 2027. And so given that strength, the management said they are again raising their revenue outlook for both fiscal 2027, fiscal 2028, compared with the guide provided last quarter. So on that guide, Q3 EPS guide came in at $1.10. So it's 3 cents above the street. And for the midpoint for revenue at $3.15 billion, so also a little bit higher. It's the Q3 gross margins that came in a little light at the midpoint, and that could be why the stock is selling off. The company also teasing that their next big long-term strategies are actually going to be shared on October 6th, their investor day here in New York, as opposed to perhaps this earnings call that is upcoming. So maybe less of a catalyst than what the street had been hoping for this name. That's why shares are down about 2%.
All right, Christina, thank you.
Yeah, Mrvl, it was just a little priced in. I mean, nothing's wrong in the numbers.
Yeah, I'm still not seeing anything on Iren. I am looking through Rbrk's quarter. I don't know why. I don't know if the market's just turning sour a little bit right now, but everything across the board they beat, like margins, the top, the bottom line, free cash flow. Like, it looks like a slam dunk. And they already, expectations were already pretty high. This came in higher than expectations, like even Whisper numbers. So,
what multiple do these guys? Are these like, is this stock really expensive? It trades at 15 times. They're not profitable. Yeah. So there's no PE.
They're not full year profitable, but they are, they did put up EPS.
Yeah, I don't know enough about the valuation other than the stock is up double in 2 months. So any small thing the street's upset with probably could be a reason why it's down. Numbers look great though, as you said.
Yeah. Yeah, they are at a new all-time high, but back in June of 2025, this company got pretty expensive, roughly almost like 6 quarters ago or so. So there has been a lot of growth since the last time that they've grown, but they sunk from essentially what was 103 or 104 at their last high, all the way down to $42 per share. That was the opportunity to buy in. They gave us a huge opportunity to buy.
Iren, so cloud revenue is now 70 million versus 33 last year. Revenue 137 versus 135. They lost $684 million. 450 of that was non-cash impairments. They lost 61 cents a share versus negative 55. So they did miss on EPS. 2026 capacity sold out. They're saying they signed a new multi-year AI cloud contract signed with a leading frontier AI lab. 4 billion contracted ARR for 2026 capacity. What does that mean? 1 billion operating ARR today.
Well, it means that the last month they can run for a full year if they end up getting those deals again. If assuming that they're long term, that they'll make over $1 billion of profit on the active power that they already have.
So they have the capacity to do 4 billion in ARR, and they're kind of saying they will do 1 billion in ARR.
Yeah, but we're not doing $1 billion right now because the contract needs to go through. They're saying like last month times 12.
Okay. Then they said new 2.8 billion GPU financing funds 90% of associated GPU capex.
How is Gap up 6%? That can't be right.
No,
everything's selling off, and the one thing that missed revenue is up. Up is down, and down is up.
Yeah. No, that's fair. Gap's up 11. It's looking like the market's kind of going to safety and discretionary versus tech after hours, given how good of a day tech had.
Rbrk's down over 10%. It erased all the day gains.
Yeah, I have no idea. I don't know this company that well, but that is a little ugly. 22 billion market cap, down 11% after hours. Iren's up 0.84. I just really don't understand how they can say we have a contract with a leading frontier AI lab. They're not even telling you the amount of money that contract is worth. New multi-year AI cloud contract signed. How, like,
yeah.
Like, am I going crazy, bro? Or is this like, this feels like a fucking scam? Like, I'm sorry. Like, what is going on here?
No, it's true though. Iren doesn't feel like the other neoclouds. Like they're not posting the growth. They keep pushing it off into the future quarters. I'm pretty sure next quarter is supposed to be quite an inflection point, but they are definitely different. Their board does not look good. What's Mike Alfred doing on their board? You know,
I'm not going to comment about that, but yeah, that is a little concerning to say the least. I mean, it is a bit weird, some of the public affiliates with this company.
Yeah, like what's a neocloud doing on sports jerseys?
And I didn't even hate that much because Golden State Warriors, tech, like I kind of get the synergy, but no one pays 50 million for that, bro. I've talked to some of these people that have bought sport jersey brands. 50 million is a very excessive multiple. Like those really go for like 10 to 15 million. So for them to pay that much, I would imagine either they're using that 6 billion ATM to just take shareholder capital and dump it into this shit, or they're really confident that they have a lot of deal flow, but we're not seeing the deals. And then the CEO gets millions of shares for doing nothing. Like literally he has to do nothing and he will get compensated for it. And I get it. He built the company, all that stuff, yada, yada. But it's, you know, it was a Bitcoin miner that transitioned. And so I don't really see where the value has accrued yet to shareholders unless they bought it at $3 when it was a Bitcoin miner.
Yeah, yeah.
Iren CEO's quote, "We started Iren with a simple observation. The digital world can scale almost instantly, but the physical world cannot. This year, that founding thesis became tangible. Exponential AI consumption growth has fueled demand for compute capacity well beyond the available supply of infrastructure. Iren was built for this moment."
I do genuinely think that the supply constraints are so large that you don't even need to be an excellent executor right now. Like all companies will win. And that's why I still think that Iren might not even be priced too expensively. They haven't really moved the way that other neoclouds have moved in recent moments. So
no, the stock is cheap. The stock is cheap. It's part of why I have a small position. Like it's cheap. No one's arguing the valuation's excessive. It's about, at this point, if we are this compute constrained, why are they not signing massive, massive contracts? Or at least forget signing, put out an LOI that like you're going to sign this contract.
Yeah, yeah.
even if it's not signed. Like that in and of itself will get the stock to pump. If you say, hey, Amazon's ready to sign, we're just, $15 billion deal, we're negotiating, but like they're very interested. Like, I don't get it. I do not get it.
Cluster Max has your answer. I mean, that's true too. They rank very poorly amongst the other neoclouds.
Yeah, I don't get this. Iren CEO, we have spent years assembling what is difficult to replicate: power, land, data centers, compute, software, and people. This is only the beginning. We are continuing to contract future capacity with a deliberate strategy, building a diversified base of counterparties and preserving room for higher value managed services and software. Site optimization is also increasing the revenue potential for every megawatt. I mean, look, if the story is they need another year because they're building out the infrastructure, the terms, the vendors, distributors to really monetize effectively in 2027, then that's not a horrible story. It's just confusing given it's been the same story for about a year now with no meaningful change.
Yeah. You still want to listen to Iren?
I am indifferent. I think we should do a poll, whatever people want to listen to.
I still think I want to listen to, I mean, obviously, let's do a poll. I still want to listen to it because it's part of the space that I'm still heavily invested in. But, I mean, I would not be a slouch on looking at Rbrk, but I'll listen to that on my own time. You can't ignore companies that consistently beat like every metric across the board. That's like, Palantir did that for too long without me buying in, even at an expensive valuation. Rbrk has made a name for itself doing that. Probably the last 6 to 8 of the last quarters that we've seen have just been constantly way, way bigger than expectations. Those are the companies that compound.
No, I agree. I mean, I think the majority of people still want to listen to Iren. So, and okay, Mrvl's also down as well. It's not like Mrvl's up 10% here. Rbrk down 10. Iren basically flat. Let's just listen to Nvidia again.
Rerun.
No, but guys, am I being too harsh? Like, I genuinely want to know, because I'm not here to pick on companies or bully on them. I'm trying to be as objective as possible.
Yeah.
And like, I don't know. I think it's fair to kind of question some of these things. But then again, I'm also not the biggest Iren bull. I don't know everything about this company. It's just a simple thesis on, hey, when CoreWeave and Nebius are growing like this, can this also be similar for another major neocloud?
Okay. Yeah, we're gonna do Iren, guys. I think that's decided, right?
I think that's decided, but also everyone. This has such a big retail following, which is why I once again am asking the question. Please tell me if not telling us the number associated with the deal or the name of the Frontier Lab associated with the deal is asking for too much. Like, I just want to know, is that, like, as a retail investor, the people who are here are retail investors, is it too much to ask for those two things? How much money are you getting on a deal? And who is the deal with? Because if that's too much, then I will not ask for those important pieces of information again. Is that FUD? If that's FUD, let me know. SanDisk is down 0.5%. CoreWeave down a little bit. Build-A-Bear, by the way, I didn't know Michael Burry was long Build-A-Bear, but he was. Apparently, he was long Build-A-Bear, and he bought more today. So he's short Nvidia in the greatest revolution we have seen in humanity for technology, and he is long Build-A-Bear, and he bought more today on the 30% dip.
Hey, I mean, maybe there's money in it. There's value.
Maybe.
It's a high value pick.
I couldn't believe it, bro. It's like he's long. I didn't know he was long Build-A-Bear. Like, you're short a company at 5 trillion growing 100% with 75% margins, and you're long stuffed animals. Like, I didn't get it. I did not get it.
Yeah, I don't know. You know what? It's one of those things that happens right before bears are just extremely wrong as they start turning their arguments away from this won't work to this is just pure fraud. And you've seen it from Ed Zitron, from Michael Burry, that they are now conceding that the numbers are just not real. It's like the last frontier, the last hill to die on. And if it was one company, this is what I've always said. If it was one company, fraud could be a possibility. Whenever it's every single business, fraud starts to be less and less likely that Sundar and Jensen and, you know, the entire list, Andy Jassy, and the list goes on and on and on. All of them are putting their reputations on the line and lying on their earnings calls.
Yeah, I have the Iren press release. I'm gonna pull it up right now. But I was listening to a little bit of this new Zitron interview. He said the only thing AI is good for is tech support. And the interviewer was like, "You really think there's nothing else?" He was like, "Literally, the only thing it's good for is like when I need to figure out how to connect two screens together so that I can screen share." And I'm like, "Okay, this guy's just trolling." Like, I get it. He's just trolling.
He's not wrong. It will be good at tech support.
It is pretty good at tech support, you know, but there's also some other stuff that he's just like, no, everything else is nothing there.
Oh, wait, hold on a second. We are getting joined by a very special guest. Ladies and gentlemen, please welcome the great and powerful couch investor.
Thank
Neil,
you very
fashionably late.
Fashionably late. I will tell you later why I was late. It was worth it.
All right.
So what's happening here? Stocks moving up, down, left, right?
Okay, so Neil, you have not heard anything about Iren yet, have you?
No, I only checked the stock to see if maybe there is a delayed release or not. Stock is flat right now, so do we have something?
So let him tell you.
Let me read you the details, and I want you to just give me your raw reaction to it, okay?
Okay.
So missed on revenue, or beat revenue by 2 million, missed on EPS, but the revenue EPS stuff doesn't really matter that much for them. These are the 4 highlights. New multi-year AI cloud contract signed with a leading frontier AI lab. 4 billion contracted ARR for 2026 capacity, 1 billion operating ARR today. 2026 capacity sold out, and they have 90% of their funding for GPU CapEx with $2.8 billion. Iren CEO says, "This is our moment. We were built for this. We have spent years assembling what is difficult to replicate. And this year, the founding thesis became tangible." That's it. That's the earnings.
Okay. Thank you very much. See you all tomorrow.
So my question is it crazy to say they're not telling us the name of this frontier lab or the amount of money they're getting from this deal? Is it crazy to say we kind of need those 2 details if that's the only real tangible piece of news we're going to get on this earnings?
Yeah, I was just about to say, do we think they're going to say something during the call, but there's no way they say it in the call and they don't say it in the press release.
Did they say how long the deal is?
It's a multi-year deal.
We don't know the duration. We don't know the size. We don't know who with. All right.
What's considered? Did they say it's frontier? Yeah, leading frontier AI lab. Yeah, I don't know. Like if it's OpenAI or Anthropic, you would name drop, you would name drop these things, especially now. So
yeah, but frontier is a weird word. Like, I mean, there is really 2 names in frontier, but then you catch people saying Grok's frontier, Metamuse's frontier. Like, there's like frontier-esque names, and I have a feeling it might be one of those names. However, wasn't there conversation about Anthropic exploring data centers in Australia?
But didn't they sign something with Sharon AI?
Sharon, yeah, but maybe they went with a couple.
Maybe, but clearly Sharon AI disclosed Anthropic, and here we get no one. It is, I don't know, the stock being flat is quite interesting.
Afrm right there. I'm not sure why they have such a big beat on EPS. That's got to be some unrecognized gain. Stock is flat, but they beat revenue by 5%. Signed a deal with Shopify to expand in Australia for BNPL. EPS is up 2,000% year over year.
I won't be surprised if that's some SpaceX early mark-to-market gains. Honestly, the amount of companies that beat earnings this year, like EPS was adjusted because of SpaceX returns, was incredible. And Max Levchin, not many people know this, the founder of Affrm, was the original PayPal founder.
Yeah.
He was a part of PayPal before Elon was a part of PayPal. So maybe they, who knows? I'm speculating before I know the answer. I'm going to go read it.
1.4 billion income tax expense. Okay, so taxes are why EPS was this big of a beat.
Like a rebate, you mean?
Yeah. Essentially. Gap is up 12. Rbrk's still down. Mrvl's down. Iren's basically flat. Workday's down 6. Workday had a good earnings too. I just think this one also pumped a little bit too hard a couple weeks ago with the Silver Lake buyout.
Oh, wait. About Rbrk? Already reported?
Yeah.
It was an absolute slam dunk and they're down.
Ah, okay. So price to perfection, up too much, makes sense.
Yeah.
Okay.
They did run to 121, and now those people are wondering what they just did to themselves.
Chris says recent 3-year agreements generate more than 20 million revenue per IT megawatt with active negotiations around 25 million. Iren estimates approximately a 2-year payback on recent deployments.
25 million per megawatt is extremely, extremely good pricing. That's what they're saying.
2-year payback is also pretty decent too, right?
Oh yeah.
Yeah.
It would be a 2-year payback on 25 million.
Yeah.
Each gigawatt, roughly 50 billion. So if you're doing 25 million per megawatt, times that by 1,000, you're at 25 billion a year. 2-year
Could
payback.
potentially improve as well as pricing goes up. So
yeah.
Interesting. Only one Nvidia call out, and that's just the exemplar cloud status.
Which is also really good.
Yeah, but it's not something new. I think I've seen many people speculate that they would have announced maybe an extra deal with Nvidia or extra, like a lot of expectations, and I think they just delivered an okay quarter, but clearly not something that would push the stock up 20-30% like we've seen with the CoreWeave or Nebius.
Yeah, I just think we were covering a lot of like the bearish things that we saw in the quarter, and the cloud exemplar status that we saw. I don't know. You're right. It was like 2 months ago or 3 months ago or something. It still is a really good sign. Especially considering the cluster max rankings. Those are the types of things that would really, really help, dismiss a bear case.
Yeah, and I mean, look, none of us here are short Iren. So someone's like, you guys just hate Iren. I mean, asking questions is what retail investors have to do. And if we don't have transparency, all you can do is ask those questions.
And we don't hate Iren. We love this sector. But when we look at Nebius and CoreWeave, and then we see Iren, there is clearly a huge difference in quality between these 3 companies. So whenever I see the Mike Alfreds of the bunch tweeting out ridiculous things on X about this company, which I still cannot believe that this guy has not been let go by the company.
So someone actually called him out on it yesterday, and he deleted his post because they said
the Van Eck guy.
Yeah, he's saying he's engaging in conflicts of interest. Like, it's just a weird. I don't know anything about the guy, but it's just a weird look publicly, and it's always going to get people wondering what's going on with management.
Amit said, "I won't comment on it, but it is concerning." Which is
no, I'm not commenting on the guy's character or who he is. I don't know anything about him, but it is concerning when a board member is posting things and then deleting things, and there's conflicts of interest being thrown. Like, same thing with Open Door. I think Open Door is a bunch of garbage because their board directors are challenging anonymous Twitter accounts $100,000 bets on if the market cap of the company they're on the board of is going to be bigger than Shopify in a year, which, by the way, he lost the bet. And I hope that guy sends $100,000 to the person he bet against. But like, if you're the Open Door CEO, you're going to let a board director make a bet with an anonymous Twitter account? about the market cap of your company. Like it is unbelievable that some of this stuff happens. And what did Open Door stock do? Nothing over the past year. And I think that's part of the reason why, right? Like if there's not good execution and there's really weird behavior by management, that stuff matters.
Funny enough, it is till this day my fastest 10x investment ever. This Open Door thing. Although I only put 1,000, but a win is a win.
Yeah, I mean, look, people who bought it at 50 cents and ran it up to 10 is amazing because someone online said it would go to 82. But the hype died down really quick, and as much as board directors tried to get the hype to come back, it's not there. So, and it's because Open Door hasn't executed. So I think with Iren, it's more so about trying to see, are they executing? And if they're not, it kind of reflects why the stock has been stagnated.
Gap up 11% on a miss.
Did Mrvl already report? Or
Yep.
oh, okay.
It was good. It was just not a big beat on the top or bottom. So,
yeah, I mean, this is no Wednesday night earnings day. Seeing Salesforce, almost every single company was either up or down double digits, or, you know, in Nvidia's case, they didn't go up or down 10%, but they were fluctuating by hundreds of billions of dollars. You know, smaller names, not as drastic beats. I guess Rbrk is definitely priced to perfection, but I definitely think that was the quarter this day. I mean, the stock reaction's pretty stark, but their numbers were actually like truly fantastic.
Yeah, but you know, it's they're down almost 11%, which means they're back to, let's check, yesterday's prices.
someone said, but it takes years for a thesis to play out. That is correct. And during those years, you need to see if the company is executing. None of this has to do with the stock. Like, if the stock was up 10%, I would still be saying, well, what is this frontier lab? Like how much money are you getting? Like, are people just buying it for the hell of it, but there's nothing, like, this has nothing to do with the stock price. This has everything to do with, okay, if a thesis is going to take many years, which is what it should take for most companies, then we need transparency in the process of those years having a thesis play out. You need to see the growth converge. And there are some really good signs, like the megawatt capacity and the pricing power that they're starting to generate, obviously the land capacity that they have, but the lack of deals here, I guess, is the question. Now, again, if you're super bullish Iren and you know they're going to get like $50 billion of deals in the coming years, then it doesn't matter. One quarter, who cares? But it's been a string of quarters now of, you know, not really getting much.
Calls at 5 o'clock, right?
Iren, yeah.
The lab's name is Frontier.
It's the airline.
Yeah.
Chris says you should write a letter to the board. I don't care enough about the company to write a letter to the board. Like, you know, shout out to Erwin. He has a very heavy position in Rocket Lab. He has wrote letters to the company before when things weren't going the wrong way, because he has a very, very, you know, he's a dedicated shareholder. I'm just trying to analyze this. I don't know if it's enough to write a letter. I don't really care about what's happening at its core. But if enough people do, then, you know, there's going to be pushback, and eventually the board's going to have to pay attention to it. Then again, the board has a lot of freedom based on their comp structure to not really care about anything.
Mick, can I ask you a question? You don't have to answer it. I don't know if this, like, if you know anything about it, but have you been following, or do you know anything about Hark?
Yeah, Brett Adcock's new AI company.
What's going on there? Supposedly they announced a multi-year partnership with Nvidia, gigascale compute capacity on Rubin platform.
I think a lot of companies announcing deals with Nvidia and not really showing anything for it are not anything special, to be honest.
So you're not you don't care about Hark?
I do not care about Hark. I've heard explanations of this competing with the Frontier Labs. I'm very skeptical that it will. And I really don't like companies signing partnerships with Nvidia for the hell of it, which is what I feel like a lot of companies have been doing recently. That's a private company that we're talking about, by the way.
Yes.
Yeah, I saw that announcement today and I was just like, what is this? Like, I just, like, it's hard to be a frontier lab. It's hard to make a model that people use. So when new players come into the space and they sign deals, but like, of course they're going to sign a deal with Nvidia. Nvidia is going to give them the GPUs, right? They're going to pay for the GPU. But like, does that mean there's anything useful there?
Yeah, why does he do it? Is the Figure guy, right?
That's correct.
Yeah, that was my question. It's just like two major startups at the same time.
And isn't Figure using, what is it using, OpenAI? Or?
They're not using OpenAI anymore. They cut off their OpenAI relationship. So I guess they're building Heart to be able to use internally in Figure. Figure I'm bullish on because I think robots are very exciting. There's a big TAM, but I don't know if a new AI lab needs to be a separate company inside of a robotics company.
Unless you're Elon, but then again.
Yeah, and look at X, right? Like it's taken a lot. They had to freaking pay $60 billion to Cursor just to get people to really start to care about XAI. So it's not easy.
Yep. What's that other robotics company that got a lot of hype?
Aptronic?
No, X that OpenAI wanted to acquire. X1, 1X.
Oh, that's
Neo
what
robot.
SoftBank's looking to acquire.
Yeah, okay. Yeah,
1X, I think.
Yeah, that was also everywhere when that first video came out. Like, oh, it's going to be amazing. You can even buy clothes for the robot, and yet here we are.
Yeah, SoftBank's looking to acquire them at a $6 billion valuation,
which is a down round from the 10 billion. I think the hype on robots is real, but it's way too early. It's not happening in the next 2 years.
I don't want to say this, Amit. I don't know what's happening in the background. I think you might have shares in it, but Figure's going to have a down round. That company got to such an egregious valuation so quick. Like, how did it even get to 40 billion so quickly? It's unbelievable.
Well, let me just say you are 100% wrong about that. I can confirm they will actually have a up round pretty soon, to be honest. Let me just say that.
I don't know how they got from, $2 billion valuation to 40 in a 3-month period.
I'm not justifying the valuation, but all I'm saying is it was a year, actually. It wasn't 3 months. It was a year. But they are definitely not raising a down round. I will say that. Okay, I'll pull up Mrvl, guys, but in 15 minutes, we got to go to Iren. So we'll listen to it, but we'll leave in about 15 minutes.
Before I discuss our results and outlook, I want to briefly highlight 2 management transitions that occurred during our last quarter. First, Willem Meintjes stepped down as Mrvl CFO in mid-June. I deeply appreciate Willem's steady hand, leadership, and tireless commitment to transforming Mrvl over his decade with the company. And I greatly respect his desire to spend more time with his family. To ensure a seamless transition, we simultaneously welcome Dan Durn as our new CFO. Dan brings more than 3 decades of experience in senior finance roles across semiconductor and enterprise technology companies. And having most recently served on Mrvl's board of directors, Dan comes into the role with a deep understanding of our business and strategy, as well as a unique appreciation for the significant growth opportunities at Mrvl ahead. Second, in July, we began a transition in our investor relations leadership. After 8 years with Mrvl, Ashish Saran will retire from the company in April 2027. I want to personally thank Ashish for his leadership, partnership, and countless contributions to Mrvl. I also appreciate the thoughtfulness and care he has brought to planning this transition, including helping us identify the right successor. A transition in our investor relations leadership. After 8 years with Mrvl, Ashish Saran will retire from the company in April 2027. I want to personally thank Ashish for his leadership, partnership, and countless contributions to Mrvl. I also appreciate the thoughtfulness and care he has brought to planning this transition, including helping us identify the right successor. On that front, I'm very pleased to welcome Ross Seymour, who comes to us from Deutsche Bank, where he covered the semiconductor industry for more than 25 years. Warm welcome to you, Dan and Ross. Now let me move on to our results and outlook. For the second quarter of fiscal 2027, Mrvl delivered record revenue of $2.739 billion, reflecting 13% sequential and 37% year-over-year growth. Revenue and non-GAAP earnings per share of 94 cents both exceeded the midpoint of guidance. On our last earnings call, we increased our sequential revenue growth expectation for the third and fourth quarters of this fiscal year to double-digit percentage growth, up from our prior outlook of high single-digit growth. Since then, our outlook has continued to strengthen, and we now expect revenue growth to further accelerate in the second half. The strength is reflected in our guidance for the third quarter of fiscal 2027, where we expect total company revenue of $3.15 billion at the midpoint, representing growth of 15% sequentially and more than 50% year-over-year. We expect growth to further accelerate in the fourth quarter, both sequentially and year-over-year. As a result, we now expect overall Mrvl revenue in fiscal 2027 to grow approximately 45% year-over-year to roughly $12 billion, up from our prior outlook of approximately $11.5 billion just one quarter ago. The increase in our revenue outlook continues to be driven by our data center business, which we now expect to grow by approximately 60% this fiscal year, up from our prior expectation of approximately 50%. Importantly, this growth remains broad-based. Interconnect continues to lead the way, while our custom business is expected to ramp significantly in the second half. For our communications and other end markets, the trajectory remains largely as expected. Despite typical quarter-to-quarter lumpiness in these businesses, we currently expect fiscal 2027 growth to approach our 10% target. Looking ahead to fiscal 2028, aggregate demand continues to accelerate, and our operations team is doing an outstanding job securing additional supply despite pervasive industry-wide constraints. As a result, we now expect Mrvl's data center revenue to grow more than 60% year-over-year in fiscal 2028, driven by strong growth across all of our key data center businesses. This includes custom more than doubling, as we indicated last quarter. We look forward to providing a deeper dive into the specific drivers of our longer-term growth at our Investor Day in New York City on October 6th. But the key takeaway for today is clear. The strength of our data center business continues to exceed our prior expectations. Putting it all together, we now expect fiscal 2028 revenue of approximately $18 billion, up $1.5 billion from the $16.5 billion outlook we provided just one quarter ago. And importantly, even as our revenue base becomes significantly larger, our growth rate is accelerating. We now expect fiscal 2028 revenue to grow approximately 50% year-over-year, compared with approximately 45% in our prior outlook. With that, let me provide color on our current business, beginning with data center. In our data center end market, we delivered record second quarter revenue of $2.17 billion, representing 18% sequential growth and 46% year-over-year growth. Both sequential and year-over-year growth accelerated from the first fiscal quarter, when data center revenue increased 11% sequentially and 27% year-over-year. Now, looking ahead to the third fiscal quarter, we expect this acceleration to continue, with data center revenue forecasted to grow more than 20% sequentially and roughly 75% year-over-year. The drivers of this growth remain very broad-based as AI demand for our products continues to rise. We are seeing strong tailwinds across each of our data center businesses, including interconnect, switching, and custom. Connectivity continues to be a critical enabler of AI performance, driven by robust demand for both our interconnect and switching products. Thus far, the largest driver of growth for these businesses has been for scale-out applications. Here, Mrvl's market-leading franchises in optical DSPs, switching, and broadband analog components continue to see significant demand. On the optical DSP side, 800 gig demand remains strong, while our 1.6T business is ramping rapidly, a trend we expect to accelerate further in fiscal 2028. Within scale-out switching, our business remains on track to more than double this year, driven by a strong ramp in our 51.2T products across a broadening array of customers. And within broadband analog, demand for our industry-leading TIAs and drivers continues to exceed expectations. Now, moving beyond scale-out, we expect this connectivity strength to broaden as hyperscalers build significantly larger AI clusters that increasingly span multiple data centers. As we've discussed on prior calls, aggregate bandwidth requirements for these scale-across networks are projected to be more than 10 times greater than those of current front-end DCI networks. Mrvl is ideally positioned to address this opportunity through our leadership in coherent DSP-enabled 1.6T ZR and ZR+ DCI modules. Finally, we continue to expect the adoption of scale-up networking and AI infrastructure to create a massive new TAM for Mrvl. Scale-up domains are expected to become significantly larger, requiring high bandwidth interconnects closely coupled with high radix, low latency switches. Now, while customers are initially deploying copper interconnect for scale-up networking, as cluster sizes grow, the reach and bandwidth limitations of copper are increasingly driving customers towards optical interconnects, as well as purpose-built UA-Link, ESUN, and NVLink scale-up switches. As a result, we are investing aggressively to lead the industry in next-generation scale-up optical interconnect and switching technologies. On the interconnect side, pluggable modules remain the primary form factor for scale-out networks, and we do not expect that to change. However, the significantly higher bandwidth density required by scale-up networks is best served by bringing optics much closer to XPUs and switches. While the transition in scale-up networks from copper to optics is expected to take several years, with both technologies coexisting, customers are aggressively planning scale-up optics deployments starting as early as next year. Given how early we are in this transition, customers are evaluating a broad range of potential solutions with multiple technologies under consideration, including NPO and CPO packaging options, with both leveraging advanced silicon photonics as well as 3 different modulator technologies, MZM, EAM, and MRM. Each of these choices has different considerations around cost, power, and technology maturity. Importantly, given the breadth of our optical portfolio across modulation technologies, fully supported by our broadband analog TIAs and drivers, Mrvl is uniquely positioned to help customers move towards the optical scale-up architecture that best meets their needs. The full spectrum of Mrvl developed solutions is reflected in accelerating design activity with a broad set of customers. In addition to our ongoing success in CPO, we are also seeing a strong adoption of our NPO solutions at multiple customers. As a result, our fiscal 2028 revenue outlook for scale-up optics has increased meaningfully compared to prior expectations, positioning Mrvl to be one of the largest enabler of NPO and AI infrastructure. Moving to scale-up switching, we are seeing similar momentum. Mrvl is uniquely positioned to support all 3 purpose-built scale-up protocols through our internally developed UAL and ESUN switches, as well as our expanded partnership with Nvidia around NVLink Fusion. Our scale-up switches leverage decades of experience developing large reticle-sized switch silicon, combined with our in-house, best-in-class, high-performance SerDes technology. The close coupling of optics and switching in scale-up networks provides another important differentiator for Mrvl, given our market-leading positions in both technologies. This allows us to deliver highly optimized scale-up solutions designed to provide customers with exceptional performance and reliability while accelerating time to market. As a result, we are engaged in multiple deep discussions with Tier 1 customers across our scale-up switch portfolio, with each engagement representing a multi-billion-dollar lifetime revenue opportunity, given the expected size of the scale-up TAM. Taken together, we are extremely excited about the continued acceleration and broadening of networking demand as AI architectures require ever-increasing performance across scale-out, scale-across, and scale-up domains. Okay, now let's turn to the custom business within our data center end market. As I mentioned earlier, we are seeing a significant acceleration in custom demand in the second half of this year. We remain confident that this business will more than double year over year in fiscal 2028 and accelerate significantly in fiscal 2029. We expect this growth to be driven by both our XPU and XPU attached products. In XPUs, we continue to make strong progress across current and next generation programs at multiple hyperscalers. And in XPU attach, we are benefiting from increasing demand for both CXL and custom NICs. Looking further ahead, we expect our custom business to continue to deliver strong revenue growth as we see ongoing robust design activity with hyperscale customers. The most recent example of this momentum is the 8K we filed last week, disclosing an expanded commercial agreement and associated warrant with a key hyperscaler, one of the largest adopters of custom silicon. The warrant agreement encompasses custom programs already in execution that were awarded to Mrvl over the past several years, new design wins, and future potential programs. The warrant structure reflects the scale and long-term potential of the relationship and further aligns common interests as our work together expands. It spans a broad range of custom silicon programs, including those that attach to the TPU ecosystem, such as AI inference accelerators, storage controllers, network interface controllers, memory interface controllers, and near memory compute. We look forward to continue working closely with this customer to enable the next generation of AI infrastructure. This expanding range of attached products and the scale of this agreement provides significant validation of the XPU attached category that Mrvl has pioneered. We are excited to see both the use cases and attach rates for this.
Is Iren's call starting now?
Continue to broaden. These
It
products
is not
are built
live
upon
yet.
a rich portfolio of Mrvl IP and perform specialized functions designed to significantly improve the performance and efficiency of the overall AI data center. This is another strong confirmation of Mrvl's leadership in connectivity, compute, and memory technologies, and the increasingly important role they play in enabling our customers to design more advanced AI infrastructure. In terms of the impact of the new warrant agreement, revenue from programs covered by the agreement through fiscal 2028 is already reflected in the overall custom revenue target we have previously provided. Looking at fiscal 29 and beyond, this agreement, along with several additional programs, gives us even greater confidence in our ability to grow the custom business to a significantly larger scale in that time frame. We look forward to sharing more details on the long-term trajectory of our custom business at our upcoming Investor Day. Turning to our communications and other end market, we delivered second quarter revenue of $568 million, down 3% sequentially and up 10% year over year. Going forward, we expect revenue to remain somewhat lumpy on a quarterly basis, given the mix of businesses in this segment. For the third fiscal quarter, we expect revenue to decline in the low to mid-teens % range, both sequentially and year over year, followed by a solid sequential recovery in the fourth quarter. To summarize, the momentum across our business remains exceedingly strong. In the near term, that strength is reflected in the significant increases to our outlook. Compared with the expectations we provided just one quarter ago, we have increased our fiscal 2027 revenue outlook by approximately $500 million and our fiscal 2028 outlook by approximately $1.5 billion. The center of this higher outlook is our data center business.
The Iren call is not live yet, so there's nothing I can switch to. This happened last time. It didn't start till 5:15. It should be starting now, which is what it says on the website. But as you can see here, there is nothing that is live. So
Iren's capex for fiscal 27 is $25 to $30 billion. That's quite a significant amount.
Was it similar to that last time?
I don't know if they gave us last time a fiscal 27 capex number, but it's a big one.
Okay, it just flipped live. Don't hear anything yet, but
hopefully it's a little bit louder than the frickin' Mrvl call was quiet.
Yeah, dude, these companies, they need to get microphones, like multi-$100 billion companies with horrible audio.
So what are we thinking? Did anything interesting other than Nvidia buying Hugging Face that also came out of nowhere? And then Hugging Face released a robot, a tiny, like a cute robot I saw.
Oh, I didn't see that.
Wait, what robot company?
Hugging
No,
Face.
I think Hugging Face released like a tiny robot thing. Wait, where
Did
was
they?
it?
Nvidia did buy them, which is cool. Oh, you know, Kevin Durant put in 250 grand into Hugging Face, and now it's worth 60 million.
Yeah.
It was in their seed round, right?
Yeah.
So Hugging Face, $399 open source duck robot called Micro Duck.
Okay. All right, I think call is live.
Star 11 again. Please be advised that today's conference is being recorded. And I'd like to hand the conference over to your first speaker today, Mike Power, Vice President, Investor Relations. Please go ahead.
Operator, good afternoon and welcome to Iren's FY 2026 results presentation. I'm Mike Power, VP of Investor Relations, and with me on the call today are Daniel Roberts, co-founder and co-CEO, Anthony Lewis, CFO, and Kent Draper, Chief Commercial Officer. Before we begin, please note that this call is being webcast live with a presentation. For those dialed in by phone, you can elect to ask a question through the moderator after our prepared remarks. I would like to remind everyone that certain statements made during this call may constitute forward-looking statements. Those statements are based on current expectations and assumptions and are subject to risks and uncertainties that could cause actual results to differ materially. Please refer to slide 2 of the accompanying presentation and our SEC filings for more information in that regard. With that, I will turn the call over to Dan Roberts.
Thanks, Mike, and thanks everyone for joining us. So Will and I started this business on a pretty simple observation. The digital world scales almost instantly. The physical world does not. Power, land, data centers, these things take years to permit, finance, and build. And this was the year that stopped being a thesis and became the defining constraint of the whole industry. So if we look at the chart on screen, across 8 models tracked by Open Router, weekly token usage across large language models increased nearly 17 times in 8 months. Every one of those tokens runs on physical infrastructure. It is very difficult to serve demand shape like that with infrastructure on 3-year lead times. And this is the start of the cycle, not the end. Cheaper compute doesn't make existing things more efficient. It makes new things economic. Infrastructure enables applications. Applications create demand for more infrastructure. Every build out in history has worked this way. And that's the structural disconnect, and it's only getting wider. So let me walk through how we're set up against that backdrop. So we operate across 3 layers from the bottom up. So first of all, it's the data centers, the land, the power, the substations, the cooling. Arguably the hardest layer to build, and that's where the shortage begins. Then the compute, the GPUs, storage, networking that go inside the data centers. And then finally, software on top, the managed services and enterprise support. That's where Mirantis lives for us. And just today, Mirantis was named an inaugural Nvidia certified hypervisor. So we've now got Nvidia validation at the software layer as well as the hardware. Why own all 3? Because each layer makes the one underneath it worth more. A grid connection is worth more with a data center on it. Worth more again with GPUs inside. More again with services wrapped around the customer. Most of this market rents at least one of those layers. We own the entire stack. So here's how the year went. Just move on to highlights, please, operator. Thank you. 4 things to take away from this update. And I'll be quick because there's more detail coming a little bit later. So firstly, customers. New multi-year cloud contracts, including Cohere, Prometheus, Perplexity, Figure AI, Fowl AI, Higgsfield AI, and separately, a leading frontier AI lab whose name we're not able to disclose just yet. Revenue, $4 billion of ARR is now contracted for our 2026 capacity. And 1 billion of that is operating today. This does not include revenue expected to ramp in 2027, such as the $700 million of ARR associated with our Nvidia cloud contract. Delivery, Horizon 1 was delivered to Microsoft this month, the first of 4 50 megawatt deployments, with Horizon 2 through 4 targeted for the December quarter. And finally, funding. $6.5 billion of GPU financing now in the past 3 months. With prepayments, that's more than 100% of the associated GPU CapEx funded. And 2.8 billion of it needed no investment grade offtake and still priced in the single digits. So let me start with customers because everything else follows from them. Our 2026 capacity is largely sold out. So the questions we get now are all about 2027 and 2028. We're continuing to contract future capacity deliberately. Every contract opportunity gets weighed on three things. Firstly, who and what does this counterparty add to the platform? The strategic merit, not just the revenue. Second, what are the economics? Price, prepayment, term, etc. And thirdly, what might it open up longer term for managed services and software? We've been saying this for a while now. Signing deals is not the bottleneck in this market. Bringing GPUs online is. We also don't need an investment grade offtake to fund GPUs anymore. So we're not chasing headline announcements. We're making long-term decisions about where we want this business to be. And when we'll sign, we'll tell you. We're in late-stage discussions with a range of new customers over a significant portion of 2027 capacity, and 2028 conversations are well underway too, both on customers and financing. Longer term, we want to keep building a deep, diversified base of customers across the AI ecosystem, all who have master service agreements with Iren. Every megawatt we build is scarce. Before every new cluster switches on, we want it in demand from both existing customers and new ones. So not dependent on any one customer, any one negotiation, or any one point in a pricing cycle. And here's who's on the platform today. So as I mentioned earlier, the headline is the new multi-year contract with a leading frontier AI lab. And to be clear, this is a new contract. It's separate from Prometheus, who we can now name as the unnamed AI developer from our July announcement. The most sophisticated buyers of AI infrastructure in the world keep choosing us. It also shows the strategy is working. We started concentrated because big customers with immediate demand were the fastest path to scale. As the platform's grown, we've deliberately broadened. Hyperscalers, enterprises, AI developers, now frontier labs across both training and inference. But honestly, the part we care about most is the third bullet point. Existing customers keep coming back. Together AI and Fireworks AI have both renewed and expanded. New logos are proving demand, whereas renewals continue to prove ongoing delivery and ongoing execution. Once we've deployed with a customer, we grow with them across sites, GPU generations, and service levels. And in terms of who is signing and growing with us, Prometheus and Figure are building products for the physical world, robotics, real-world automation, and they're contracting our compute to do it. AI is moving well beyond chat. This is the thing we keep telling people. You cannot size this market of today's usage. And that is exactly why the market keeps getting caught structurally short of compute. Now let's move on to pricing. So pricing has moved a lot. 3-year contract pricing is up about 125% since November. 5-year is up about 70. Recent 3-year contracts are pricing in excess of $20 million per megawatt of IT load, paying back the compute investment in around 2 years, while active discussions are now at around $25 million per megawatt. Recent customer prepayments are funding 45 to 55% of the GPU capex. What's behind that? The market's tightened, no question, but it's also who we're signing, how the deals are structured, and what we attach on top in managed services, which Mirantis keeps expanding. Shorter duration and on-demand sit above that as further upside in due course. Revenue per megawatt is shorthand, by the way. We look at the whole return: price, term, prepayment, utilization, customer quality, and expansion opportunity. And to be clear about what we're not doing, we're not sitting on capacity to time a spot price. We allocate capacity to build the customer base and the platform as we see fit. The pricing follows that. Okay, so from customers to what we're building. The targets, roughly 300 megawatts of IT load delivered in 2026 and another half a gigawatt in 2027. That'll take the platform to around 1.2 gigawatts in 2027 of gross capacity. And we're continuing to build across Texas, British Columbia, Oklahoma, South Australia, and Spain. And right now, today, there are more than 4,000 people mobilised across our active sites. The best example of that today is Horizon 1. So, as we announced earlier, Horizon 1 was delivered to Microsoft. First of 4 50-megawatt liquid-cooled deployments at Childress, and it achieved Nvidia Exemplar Cloud status on GB300 NVL72, which matters because it proves we can integrate and operate the full platform, hardware, networking, and software, not just build the shell. The delivery matters, but the template matters more. Every Horizon uses the same design, the same supply chain, the same site team, and each phase carries the lessons of the last. Horizon 2 is in the process of working towards commissioning. 3 and 4 are in late construction. So all 3 are targeting delivery in the December quarter. And that approach is running at every site. So quickly on 2026. At Childress, retrofit work and GPU installs are running in parallel on the air-cooled cools. At Mackenzie, GPUs are being racked across the first 2 buildings. At Prince George, the air-cooled fleet is now fully commissioned and liquid-cooled installation is underway. All of that remaining capacity is targeted for the December quarter. Then 2027. Sweetwater 1 is in full swing now. First building is going up. The primary substation is progressing. At Childress, Horizons 5 and 6 civils are now moving and underway. And another 250 megawatts of air-cooled conversion progressing. And it's also worth mentioning in terms of Canal Flats, we've now decided to convert all of that to liquid cooling for GB300s. And that will deliver more value from power and a site we already own. But beyond that, the pipeline steps up again. 2028. Sweetwater 2 and Kiawah in the US, Bundy in South Australia, and Badajoz in Spain, roughly 300 megawatts, and the flagship of the Nostrum portfolio of sites we closed during the quarter. All up, more than 5 gigawatts announced, with a multi-gigawatt development pipeline behind it, including more Texas power, where a tighter interconnection process should favour real and well-capitalised projects. And then a quick word on design, because it answers a question we're starting to get a lot. So the bear case we hear on this industry is that AI data centres get rebuilt in 10 years. We've spent this year making sure that ours don't. Sweetwater 1 is becoming the reference design for Sweetwater 2, Kiawah, Bundy, and what follows after those. Common layouts, common equipment, more modularisation and prefab. Each project is inheriting the last one's lessons instead of starting from zero. And the design is built for successive GPU generations, evolving cooling, including 800-volt DC, all of which has been developed in collaboration with Nvidia. So we know compute changes faster than buildings, and ours have been designed to adapt to that. But we're also getting more out of what we already own. Our existing sites have spare power beyond current deployment plans. That headroom can support more GPUs and more revenue without the need for any new grid capacity. And new grid capacity is the scarcest input in this entire industry. So revenue that doesn't need it is about the highest quality growth there is. First up, new liquid-cooled installs at Mackenzie, Canal Flats and Prince George in 2027. And over time, tools like Nvidia Max LPS, which smooths GPU power draw, let us safely run more compute inside the same electrical envelope. But none of this happens without people. Our headcount nearly tripled in FY26, including hundreds of colleagues who joined through Mirantis and Nostrum, and we expect similar growth again in FY27. 5 C-suite appointments across development, product, marketing, innovation, and information security. People from Nvidia, AWS, Oracle, Google, and other leading data center operators. So building our organisation ahead of the revenue is obviously deliberate. It costs money before it makes money, but this is where we're going. One last piece before I pass off to Anthony is how we're funding this growth. So GPU financing first, because now the model is proven at both ends of the credit spectrum. For the Microsoft contract, we raised $3.6 billion of investment-grade GPU financing at a weighted average of about 6%. With customer prepayments, that funded about 96% of the associated GPU CapEx. Now, here's where it gets really interesting. For non-investment grade deployments, so the rest of the AI ecosystem, we just closed $2.8 billion of equipment financing. That includes $2.4 billion at a 9% fixed rate for Mackenzie, led by Blue Owl and funds managed by PIMCO. A delayed draw term loan alongside senior secured notes, funding 90% of that GPU CapEx. Add prepayments of 45 to 55% on recent deals, and total funding well exceeds the cost of the underlying GPUs, which is good because that excess is now helping to support data center CapEx on those same and future deployments. And to date, talking about data center CapEx, we have deliberately kept 100% of our data centers unencumbered, which is a growing asset base we can finance when the timing is right. So on that note, Anthony will take you how that funds the plan and the results. Thank you, Anthony.
Thanks, Dan, and good evening, everyone. Over the past 12 months, we have secured circa $19 billion in funding, nearly $16 billion across customer prepayments, GPU financing, and convertible notes, alongside equity of approximately $3 billion. The vast majority of this funding is either in cash or yet to be drawn down, giving us significant capacity. For FY27, we're guiding CapEx of approximately $25 to $30 billion. Included in that estimate is delivery of the contracted Microsoft capacity, the other deployments to deliver on 2026 ARR, and GPU and data center CapEx for air-cooled deployments scheduled across calendar year 2027. It will also support new liquid-cooled data center capacity at Childress and Sweetwater 1 for delivery in the second half of calendar year 2027, as well as earlier stage investment for 2028 and beyond. Of course, the actual CapEx for the year will depend on a range of factors, including final costings, construction schedules, delivery timelines for GPUs and long lead items, the overall contracting environment, and the overall fundraising environment. Within that CapEx estimate, we expect data center and CapEx GPU requirements to be up approximately 15 to 20% for ongoing and new deployments, with revenue increases expected to ultimately outpace those increases. In respect to the funding plan, as noted earlier, we have a strong starting position. Approximately $14 billion of existing cash and committed GPU financing and prepayments. That includes $7.6 billion of cash on the balance sheet at 30 June, of which $1.7 billion is restricted, with most of that 1.7 billion set aside to fund Microsoft GPU CapEx. We're targeting roughly an additional 8 billion of GPU financing and prepayments in support of GPU CapEx requirements, noting the healthy prepayments that we are seeing in recent contracting and the growing market for GPU financing that Dan has spoken to. The balance of the requirement we expect to meet through data center financing, operating cash flows, and corporate sources. On data center financing, as Dan has spoken to, our entire data center portfolio is unencumbered today, including Horizons 1 through 4. So there is obviously a significant and growing asset base to raise asset finance against. Alongside the growing market for GPU financing, attractive customer prepayments, we feel well placed to scale our fundraising efforts to support the rapid growth of the platform. Now turning to the Q4 results and outlook. The quarter's results continue to reflect the ongoing transition to AI cloud. For the June quarter, revenue was 137.2 million, including AI cloud revenue of 70.5 million. This was down 7.6 million compared to the prior quarter as we decommissioned mining hardware ahead of GPU installations, partially offset by AI cloud growth. Cost of revenue also fell 6.6 million, mainly as a result of lower electricity usage from reduced mining activities. Net loss was 684 million for the quarter, largely driven by non-cash impairments of 450.4 million, mostly on account of decommissioning mining hardware, plus a 102.1 million decrease in fair value of mining hardware held for sale, both reflecting costs of transitioning our existing sites to AI cloud. We currently expect mining operations to be effectively decommissioned by the end of December 2026. We expect first quarter cash SG&A to increase approximately 40 to 50 million sequentially as we continue to invest for growth across sales and marketing, R&D, development, site and cloud operations, and other functions ahead of significant revenue growth over the coming periods. Which brings me to ARR. We exited Q4 at roughly $500 million of ARR. It's 1 billion today following acceptance of Horizon 1 by Microsoft, and that will carry through to the end of the September quarter. And we expect more than 4 billion of ARR by the end of the December quarter, which is already under contract and includes delivery of Horizons 2 through 4. A significant amount of the December capacity is expected to come on late in the quarter, so we will see the reported revenue effect come through predominantly in the March quarter. With that, I'll hand back to Dan.
Thanks, Anthony. So just one slide to close on. 2026 is largely sold out with the 4 billion of ARR now contracted. 2027 and beyond is deliberate runway for us. So this is capacity we're continuing to convert into a broader customer base and, of course, a richer service mix. Revenue per megawatt is rising, both on structural demand as well as site optimization, and that $4 billion comes from less than 10% of our 5 gigawatt plus portfolio of secured grid connections. So 8 years ago, we set out to solve the gap between digital demand and physical supply. I think it's fair to say the gap is here. We own the power, we own the land, we own the data centers, we own the compute, we own the people, the software, and we have the people to service it. So for Will and I, this is only the beginning. But operator, let's open the line for questions, please.
As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. A moment for our first question. And our first question comes from the line of Mike Ng from Goldman Sachs. Please go ahead, Mike. Your line is open.
Hey, good afternoon. I just have two questions. First, I was just wondering if you could talk a little bit more about Mirantis and how it helps facilitate the commercialization of your compute. Was Mirantis used or helped to enable any of the signed or in negotiation deals today? Do you think you'll eventually use Mirantis to help sell some capacity into market aggregators like OpenRouter? And then I have a quick follow-up. Thank you.
Yeah, happy to jump in there. Thanks for the question. In terms of the Mirantis service offering, I think there's a few elements to that that help with our business today. Firstly, as you identified, it opens up effectively new customer classes to us. As we've spoken about at length previously, very large hyperscaler or frontier AI lab customers generally like to take compute on a bare metal basis, but smaller AI developers, labs, enterprise customers value having an orchestration layer offered over the top of bare metal compute. And so the Mirantis service offering, as it relates to that orchestration layer, can help open up that part of the market to us. In addition to that, it does give us the ability to provide compute in a different manner. So not only can we provide reserved managed services clusters, but it also opens up the potential for us to provide on-demand compute, as an example. In addition to the orchestration layer itself, Mirantis has a long track record of servicing enterprise customers in the cloud computing space, and they bring a number of other areas of expertise, including enterprise support, monitoring and deployment capabilities that can help us monetize our platform more quickly and continue to provide very high levels of customer service. So those are a few of the areas where Mirantis adds to our existing platform.
Great.
And I think
Thank you, Ken.
maybe
and then,
just to add to that, I think we're now the only NeoCloud certified hypervisor from Nvidia as a result of today's announcement. So that kind of vertical integration, that full stack, is playing out live time.
Thank you, Daniel. And I just wanted to follow up on the CapEx outlook for next year, $25 to $30 billion. Is that all to support the 800 megawatts that you expect to contract next year, or is it beyond next year? And then could you maybe just talk about the financing plan beyond the $14 billion of cash, GPU prepayments, and other debt financing that I think you talked about?
Sure. Just in terms of the, and thanks for the question. Just in terms of the first question, so the 25 to 30 billion is obviously covering the financial year to June 27. So that covers all the CapEx requirements for the 2026 deployments that contribute towards the 4 billion ARR target. It covers expected data center CapEx and GPU CapEx for sort of air-cooled, the balance of the air-cooled deployments expected to come over the course of 2027 calendar year. And it also covers a significant portion of CapEx required for the liquid-cooled deployments in the second half of 2027 calendar year. It doesn't include CapEx requirements for the GPU compute for those new liquid-cooled facilities, which will be part of the following year's capital plan. In terms of financing, obviously we spoke to the 14 billion, so that's secured. I also spoke to 8 billion estimated of additional GPU related CapEx, so that will be supporting the GPU deployments included in that 25 to 30 billion. Obviously, we've seen a very strong fundraising prepayment environment, which obviously contributes to that $8 billion number. And we've seen strong conditions, obviously, in GPU financing. Obviously, Dan spoke to the results that we've seen in the recent transactions, but there's obviously also been other transactions in the market, both for investment grade and sub-investment grade clients. We've also had the recent announcement by Nvidia alongside 6 of the biggest capital allocators in the world, announcing JVs, partnerships to support further financing of AI compute as an asset class. In addition to that, we obviously have 1 to 4, substantially built and being delivered over the course of the year. That's obviously unencumbered, as well as other opportunities we're looking at, both asset-backed and other group-level initiatives as well.
Great. Thank you for the clarification.
Thank you. We will now take our next question. And our next question comes from Paul Golding from Macquarie. Please go ahead, Paul. Your line is open.
Thanks so much for taking the question, and congrats on all the tremendous progress. I wanted to first ask about the British Columbia liquid cooling pivot, and wondering if you could unpack that decisioning process a bit. Sounds like there's excess power available, and there's obviously a revenue opportunity, but was wondering how you were thinking about the relative return there, and if that was organic or from demand that you've seen, or speculative. And then I have a follow-up. Thanks so much.
Primarily, Paul, it's driven by demand that we're seeing, and we do have a design that is very effective for the conditions that we see in British Columbia for liquid cooling. It is something that increasingly, as customers are looking towards future workloads, we do see the vast majority of customers over time looking towards liquid-cooled GPUs. And so we are certainly reflecting that in terms of the mix within our portfolio.
Great. Thanks so much, Ken. And then Anthony mentioned that the compute costs that are rising are being more than covered by revenue increases. I was wondering if, given the continued march upwards of compute cost, what the calculus is and your thought process and strategy around taking some of the excess liquidity from prepayments and the financings that you've done, and allocating that towards data center build out versus maybe longer dated compute purchasing, given, and maybe on a speculative basis, given that price trajectory we've seen in compute. Thanks.
Yeah, I think in short, we're doing both. So as Dan mentioned, this is, you need all the layers in the stack in order to be able to sell compute. You have to have the data center capacity, and we continue to see extremely strong demand within the industry and a lack of capacity available to satisfy that demand. And so we will continue to build out data center space. We will continue to make compute purchases over time and continue to add that software layer over the top to be able to expand our addressable market and secure better economics over time. So we expect to see a mix of purchases on spec, as well as some purchases that may be tied to customer contracts. But as Dan said, contracts are not the driver in this industry. It's getting the compute online. And so that is what we are heavily focused on the execution side of the business.
Hey, Ken, for Paul, I might also just add to your CapEx question around that revenue, and it adds a little bit more to what Anthony said earlier. So if we step back and look at this revenue CapEx trade-off, the contracts that we're announcing now and the pricing per megawatt relates to GPUs that were ordered quite some time ago. So arguably they're reflective of natural price increases beyond CapEx inflation on those GPUs. Now, future generations of GPUs and costs are going up, but we didn't have to pay the cost increases on the revenue per megawatt that we've announced today necessarily, because they're the older generations, if that makes sense. But there's also a bit more nuance to our CapEx needs. So yes, we've guided total CapEx of $25 to $30 billion for FY27, but that we deliberately don't split it in or attribute that to a specific number of megawatts of IT load coming online, because the reality is that data center CapEx is running a year or two ahead of delivery. But that's the nature of substations and steel. So the mix in any given year is really a function of what we're delivering that year versus what we're building for the next one. So I think we are working on how we stagger data center CapEx and how we finance data center CapEx. As we mentioned during the presentation, 100% of our data center portfolio today is unencumbered, which creates a future opportunity. And when we're receiving prepayments equivalent to 50% of the GPUs, that's roughly equivalent to 100% of the data centers, because GPUs are roughly 2/3 of your fully loaded cost for the data centers plus the GPUs. And if you're financing the GPUs at 90% gearing already, then you can see how you've got this funding flywheel that's emerging that requires arguably little equity over time to finance it. But we've then got to overlay our ambitions are growing. We're building at a higher cadence to what we've done in the past. So those funding needs continue to grow. But we've got flexibility around growth based on optimizing the funding that's available to us at any point in time.
That's great color, Dan. Thanks so much. Maybe just a quick housekeeping question on the back of that, if I can sneak this one in. Just on the 2/3 compute versus data center CapEx, is that shifting at all with the increased cost of compute, or is the labor market being tight and other inputs on the data center construction side keeping that equation relatively stable? Thanks.
No, it's staying pretty stable. I mean, we're seeing inflation and costs across various components continue to tick up. So at a material level, I would assume that ratio stays relatively consistent.
Great. Well, thank you both.
Thank you. We will now move to our next question. And our next question comes from Brett Kuplock from Cantor Fitzgerald. Please go ahead, Brett. Your line is open.
Guys, congrats on the quarter. Great to see kind of demand trends around 26 and certainly 27 and 28. I'm curious, kind of following into Horizon 1 build out. We've seen a lot of deals recently with maybe lower PUEs. Are you seeing any design changes that might allow for lower PUEs at other sites that you guys have coming online, or other buildings coming online in 27 and 28? Or should we kind of think of that PUE with the Microsoft deal being somewhat static?
I mean, PUEs are never entirely static, but they are largely driven by the nature of the ambient conditions in which your data centers are operating. We've spoken before that we use a highly efficient closed loop liquid cooling system. And that means we have very effective PUEs relative to the broader industry. We do see some continued improvements over time, and part of that is driven by items like Nvidia's DSX reference architecture, where they have looked at how you can operate chips at higher temperatures without giving up any performance on the computing side, but allowing you to direct more of your overall megawatts towards the IT load. And away from cooling, but those are around the edges rather than being really material drivers of decreases over time.
And I think just to add, we've been deliberately conservative on the headline PUEs that we've advertised. We even had a slide dedicated into the deck to this thematic, which is we have spare power beyond our current deployment plans, and some relates to optimizing this PUE over time. The reality is the average PUE for a year is substantially below the maximum PUE that you require. So there's a few little tweaks that you can make that free up quite a lot of power capacity alone. We've then got the Nvidia DSX Max LPS opportunity, and we're aware others are using power management tools to oversubscribe megawatts as well. Like, there's a lot of flexibility within that envelope, and to date we've kept it simple. 200 megawatts of IT load for 300 megawatts of gross capacity, but we are also making it clear today that there is a reasonably sized opportunity in the portfolio to free up some of that spare power.
Awesome. And then maybe I could just follow up on some of the pricing commentary that came across quite strong, I think, in prepared remarks and the release. Kind of $20 million deals is what you're seeing, or what you've signed. Now it's kind of somewhere around $25 million. Is that over what duration? Could you clarify? And is that more one-off, or do you think like that is kind of like the ballpark of maybe the average you're seeing across all the conversations you're having with customers?
No, we're seeing that consistently across live conversations with customers at the moment. And there are a variety of things that go into it. As Dan mentioned, we look at term length, prepayments, nature of the customer, likely growth requirements over time. But the pricing that we're seeing is relatively consistent at the moment. It continues to show an upward trend. We're seeing very strong competitive tension for near-term megawatts. So we certainly think that those numbers that we put out are indicative of where the market is currently at, with upward pressure over time.
And to be clear, they're 3 to 5 year deals, not 2 year, not spot capacity. There is a substantial opportunity if you wanted to optimize near-term quarterly P&L to go and sell spot on demand. And that is something that we might entertain as part of the portfolio approach over time. But today, we are loving just building the customer base, diversifying across the AI ecosystem, having longer-term contracts, getting really accretive financing back in those contracts. And over time, that'll buy us a license to dabble more into on-demand, shorter-term contracts, introduce software leveraging Mirantis and other capabilities for higher revenue profiles.
Thank you, guys. Appreciate it.
Thank you. We will now take our next question from Michael Donovan from Campus Point. Please go ahead, Michael. Your line is open.
Hi. Thanks for taking my question. Just go back to the 25 million in revenue per IT megawatt. How do the economics you're seeing in the US compare with what you're seeing with initial conversations in Spain and Australia?
I think very consistent. At the end of the day, this is largely a global market for compute. A number of the customers that are accessing compute out of North America are based overseas, and so it does drive a genuine global market for compute. And there may arguably even be additional scarcity factor in some of those other locations where it relates to things like sovereign AI, for example. So I think that pricing that we're seeing in North America is very indicative of global conditions.
Thank you. And then one more follow-up, if I may. I wanted to get clarification on the Nostrum acquisition. So it's my understanding it brought roughly 490 megawatts. In your prepared remarks, you mentioned Badajoz accounting for roughly 300 megawatts. For that difference, is the 190 megawatts across a couple of different sites, or how should we think about that?
Yeah, so there are a number of other development sites in the Spanish portfolio where we have capacity secured, but Badajoz is the key site that we chose to focus on today, as that is the nearest term build out and the largest site within the portfolio.
Thank you. Congrats on the progress.
Thank you. As a reminder, before we move to our next question, please press star 11 if you wish to ask a question now. Next, we have Nick Gels from B. Riley Securities. Please ask your question, Nick. Your line is open.
Yeah, thanks, operator. Good afternoon, guys. Just wanted to ask one about Texas. I know it's not a fun topic, but was just curious if you could touch on what some of these dynamics have enabled from a commercial perspective, just given that you already have 2 large-scale energized sites there. Thank you.
Hi, and by the dynamics, are you referring to Governor Abbott's directive or something else specifically, Nick?
Yeah, Ken, exactly. Just the directive and just given the uncertainty around some of the kind of earlier stage sites there, if that might have pushed some potential deals more towards your corner.
Yeah, I think as it relates to Governor Abbott's directive, if you look at what that is targeting, it looks at things like transparency, grid reliability, water usage, issues in terms of impact on local communities. And these are all things that we've had a specific focus on from day one and have always been important to us. So if you take Childress as an example, we funded all the required grid upgrades for that project. As you know, we're located a number of miles outside of the main town area there, where we don't have residential neighbours and we're not impacting neighbours or the local community from an operational perspective. We use a highly efficient closed loop water cooling system, which has very minimal ongoing water usage over time. So I think everything that we've done in setting up our sites and our portfolio, is in line with what Governor Abbott came out with in his directive. So I think in that sense, we actually welcome the additional transparency within the market. And then, as you mentioned, we do have 2 very large sites already energized in Texas, which I think positions us extremely well outside of just those dynamics that I mentioned as we move forward here.
No, thanks, Ken. That's helpful. And then maybe just as a follow-up, we've seen a lot of deals where there's kind of initial contracted capacity, but then there's an expansion option, maybe with exclusivity for some period. And I can't recall Iren having, with any of those expansion options embedded. Is that something that you're considering in future deals, or have you kind of intentionally strayed away from those options?
Yeah, we've intentionally strayed away from that historically, but it's obviously part of the bespoke conversation with each customer. As you would guess from our thesis, which Dan outlined again earlier in this call, we see very significant value in infrastructure and compute moving forward. And so if we're going to give up an option to somebody over that, we need to be compensated for it. So it really just comes down to that dynamic. But yeah, we've generally shied away from it previously because we see more value typically than the counterparty.
Understood. Well, thanks, guys, and keep up the good work.
Thank you. We will now take our next question from Mike Colonnes from H.C. Wainwright & Co. Please go ahead, Mike. Your line is open.
Hi, Dan and team. Thank you for taking my question, and congrats on all the strong momentum here across the AI cloud business. Just one for me. I was hoping to get more color around how you plan to allocate future uncontracted capacity here. Really the specific customer segment you're most interested in pursuing heading into 2027, and how you guys are thinking about balancing pricing with financing costs when evaluating larger versus smaller customer contracts. It feels like you're trying to monetize a little bit higher on the stack with the acquisition here. Just trying to get a sense of how you guys are evaluating these deals.
Yeah, I think Dan touched on a lot of the elements that we look at earlier in terms of the earnings overview. I mean, we look to the type of customer, the industry they're in, their planned growth rates over time. As you would have seen with our customer mix, it has been shifting towards direct end users of compute. We now have added additional names in the AI native space, a large leading frontier AI lab, as well as some of these physical infrastructure related AI developers. So we see a lot of very attractive profiles across the sector, and for us, as Dan mentioned, we've been aiming to diversify our customer base over time. We have a range of attractive long-term contracts within the portfolio that now set us up for very attractive economics as we move forward here, and that in turn buys us some additional flexibility to be able to look at different monetization methods, whether that is selling on a shorter term basis in terms of reserve contracts that drive additional economics, whether it's looking at true delivery of on-demand compute, whether it's managed services offerings versus bare metal. And one of the nice things with the position that we're in today is we have optionality over all of those different areas, and particularly with the development of the financing market for sub-investment grade counterparties, which is something that we always expected to develop, and we're now really seeing the proof of that. It means that we can still continue to get very attractive financing for a range of different customer types. So we're certainly very excited at the prospects as we move forward here, being able to monetize the platform in different ways and get additional economics over time.
Appreciate all the great color, Kent.
Thank you. We will now take our next question from Ben Summers from BTIG. Please ask your question, Ben. Your line is open.
Hey, yeah, thank you guys for taking my question. So I wanted to ask a bit on the conversations we're having for 2027 and 2028. It makes sense that we're maybe not exploring some like the really short duration stuff now, but as you think about what you're hearing from customers in terms of the window from 3 to 5 year contracts, kind of where are you seeing most customers heading from within that time range, and what's the ideal, if there's any time length in your guys' perspective?
I'll jump in, Ken. I think we're starting to see longer term conversations, conversations around longer term than just the 3 to 5 years. But this is the balance, right? We're running it essentially as a portfolio. Anchor tenants like Microsoft give you the scale, the duration, and cheap capital with the 6% GPU financing, whereas AI developers and the broader market give you slightly higher pricing, good prepayments, and a lot of where the growth is. So we want to remain flexible. At the end of the day, the framework for assessing new customer contracts is, as we have outlined on this call, it's who and what does the counterparty add, what are the economics, and what does it open up longer term. And yes, there's a trade-off. The investment grade anchor gets a 6% money, non-investment grade gets 9%. So it sounds like the investment grade wins on that until you start looking at the pricing, until you start looking at the prepayments funding around 50% of the GPU capex. And I think those prepayments are probably the most exciting part for us, when they're funding half the GPU capex up front on top of the 90% financing we're getting already. These guys are sending a pretty clear signal. It's not just about contracting capacity. They're starting to finance our build out for us. And I think that tells you a lot about demand, more than any pricing chart in a presentation.
Super helpful. And then just one more, if I could. If you could just give any color on preliminary conversations around potential data center financing. I know you guys talked about potentially pursuing that down the road. So just wanted to ask around any preliminary conversations you've had there.
Yep, lots of preliminary conversations, and we'll let you know when we close one. But we've been busy. There's lots going on customer side, lots been going on the GPU financing. That's been the lower hanging fruit. We've previously mentioned we'll look at refinancing effectively horizons as they're commissioned, as it makes sense to wait till they're stabilized to get a better financing package. We'll look to finance data centers as they're commissioned, but potentially also in advance of commissioning. And one of the challenges we have and the opportunity associated with being vertically integrated is you've got this staggered GPU capex, which starts a couple of years out from commissioning. Sorry, not GPU, data center capex, which starts a couple of years out from commissioning because you need to order the steel, you need to order the transformers, you need to order a whole heap of long items. And yes, a lot of those payment milestones are back-ended, but capex is incurred in the lead up to commissioning, and find efficient ways of financing that to allow us to scale into that 5 gigawatts really quickly, let alone the multiples of that sitting behind it in our pipeline. Like, that's the big unlock for us. Like, the customers, they're there. Like, I don't think anyone's disputing that anymore. So for us, it's all about that capital flywheel and managing it efficiently to get us in a position where we can meet that market demand, because we are in a really, really unique position because we started 8 years ago. We locked up all the land and power. We've aggregated the team, the expertise, the partnership and collaboration with Nvidia to build and operate these things. And capital efficiency is a really big part of the next unlock. And GPU capex efficiency is now here. Like, objectively, the data we've published today, what we've closed, that is efficient, and it will only get better. In terms of the data centers, that's the next frontier, and we're pursuing it, and we're excited about it.
Super helpful. Thank you for taking my questions.
Thank you. We will now take our next question from Joseph Vafi.
All right, guys, I have to go. Tanner will continue streaming it. Yeah, I got to get out of here, but I'll see you guys when the market opens tomorrow. Bye, everybody.
I don't think his mic was there, but he's got to go at 6, and I got the stream here. So
we're having a lot of discussions on financing. Obviously, you've got a lot of resources available at your disposal, but it's a big industry, and a lot of people are doing a lot of financings out there right now as well. Just some high-level thoughts, maybe Anthony or Dan, on the financing environment, sustainability of the industry to continue to finance this broader build out at this pace. If there's anything that you're worried about there, how Iren may have some advantages, given its different pieces to the business, and then a quick follow-up.
Cool. Thanks for the question. I guess we've touched on a few of the sort of fundamentals at the moment. I guess we're seeing, if the evolution of the market has been on the GPU financing, we've seen it started as a private credit-led product at sort of mid-teens returns, and investment grade cost of capital now is sort of in that 6% area. We've obviously seen the market open up in terms of the pools of capital participating in GPU financing. So private, public markets, investment grade, sub-investment grade. That's all positive. We've obviously, as I touched on, also had the other considerations, such as the big announcement by Nvidia with 6 of the biggest global allocators, which will provide more support to the market. We've also spoken about prepayments, which are obviously a big part of the overall funding position as well. We've obviously also seen the data center financing market evolve as well to support the infrastructure to build out, both in the high yield and the investment grade space. And obviously there's obviously very strong conviction in capital circles in terms of the sustainability and outlook for I guess this fundamental shift that we've had in technology and the investment that needs to be made, and also conviction in the returns that will ultimately come. So I guess it's really that conviction which I think will attract capital and continue to attract capital. Obviously, we need to continue to evolve our plans subject to market conditions, and obviously market conditions can go up and down, and obviously we need to be nimble and flexible in terms of how we adapt to that environment and adjust our plans accordingly.
We hear this question a bit, Joe, which is, can the financing keep pace with the asset class? But let's just look at what happened. 12 months ago, GP financing barely existed as an asset class. And then in the last 3 months, we've raised $6.5 billion of it at both ends of the credit spectrum. So that's not us getting lucky with financing. Like that's a market forming, and markets, they form the same way every time. Think about real estate financing. Like no one asks whether an office tower with a signed tenant can get a mortgage. There's a whole capital stack that exists for it: construction finance, term debt, institutional money, because the cash flow is contracted, the collateral's real. And that stack took years, probably a decade, to build for property. And it's building for AI infrastructure in months and quarters because the same ingredients are there: the hard assets, the contracted revenue, the institutional counterparty. You know, Blue Owl and PIMCO, like they're not bit part players. They're the largest infrastructure lenders in the world. And they've now underwritten us, and we've got a dialogue at the highest levels there. But I think the analogy actually undersells it a bit, because a building leased for a few decades at a few % yield, like our contracts are paying back this compute investment in around 2 years, with customers prepaying half the capex up front. So lenders can see their money back in really short timeframes. And property finance never had economics like that. So I think whenever there's a new emerging market, like if the demand is real, the financing follows. It always has, whether it's for railway, for telecoms, for property, for power. And in terms of whether the demand is real, I think the customers are proving it. They're proving it with prepayments. They're proving it with their end markets and their results and their revenue and their customer market traction. So the layer that hasn't really started and developed as much as the GPUs are the data centers. But in traditional speak, the data centers are actually the easier ones because they're more closely aligned to property and real world infrastructure. And there is cash there. We know that. And it's waiting for us to pull the trigger. And we'll look more closely at that over the coming months.
Great. Thanks for that color, Dan and Anthony. Much appreciated.
Thank you. That was our last question for today. I'll now like to turn the conference back to Dan for his closing comments.
Thanks, operator. Thank you, everyone, for joining. So the short version of FY26, 4 billion of ARR contracted, 1 billion is operating today. Horizon 1 has been delivered to Microsoft. And as we've just touched on extensively, a funding model that's working efficiently at both ends of the credit spectrum. So all of this achieved on a fraction of the platform that we've got today. And I guess shout out to the Iren team around the world and everyone who has joined us in recent months with Mirantis, Nostrum, a variety of broader players in the market. Keep doing what you're doing. The plan doesn't change. We keep delivering capacity. We'll keep converting it into durable customer relationships, and we'll keep funding it with discipline. Thanks, everyone. We'll see you at the next result.
Neil, that was Iren's quarter. I don't know. I don't think you're a shareholder today, but how did you feel about that? It seems to me that this was the last quarter before a real inflection in their growth. Do you think that it's a lot of just... I'll just let you speak. I don't want to bias your commentary here.
I'll just say this was a painful call. What was mentioned, just first of all, the guy at the start just kept on saying how we are looking at things is not the correct way to look at things because we are doing this way, we are doing this that way, and the way we're calculating things makes a lot more sense. Like, dude, like, shut the F up, start delivering some results. Thank you. And like, even the ARR numbers, like every time I look at the little number 1, the little number 2, and it's always the same. Like even the calculation for ARR, the $1 billion operating one turning into $4 billion, it's not truly turning into the traditional ARR numbers. So many things, like just keep it simple. Like when we look at CoreWeave, when we look at Nebius, it just makes a lot more sense that they're not talking about, oh, we have this and we have that. Like it's at almost the end of 2026. Stop already with your, we have this energy and land and blah, blah, blah. Like companies are deploying gigawatts now. It's nothing new. Like you don't have some magic potion that nobody else has.
Mhm.
So can we just stop with this BS? I don't know. It wasn't the greatest quarter out there. Plus this whole, oh, we've signed a frontier lab, we cannot disclose this just yet. Then you shouldn't have written anything.
Right, right.
if
You
we're
may
being
just be in
honest.
talks or something like this.
Like, oh, we can announce it in the press release, but we cannot tell you yet. So what? Is there an agreement? Is there not an agreement? You're going to spend $25 to $30 billion in capex next year. How are you going to fund that fully? I don't know. And if you are planning on growing that much, why? I'm not seeing any revenue that justifies $25 to $30 billion in capex. If I look at CoreWeave, I see $100 billion in backlog. If I look at Nebius, I see gigantic deals and backlogs as well. So, like, what's going on here?
I think even going into this quarter, like, I think they might have missed revenue but not by a lot. It really came in how much we thought it would.
That's fine because they had a good Bitcoin mining business, which was very profitable for them. So that's fine. I was expecting revenue to be a bigger miss than this, but that's okay.
But next quarter is expected to inflect. I think we're expecting practically double the revenue next quarter than what we just saw this quarter.
Well, I sure hope so, right? Because you have to reach your own targets that you have been setting, and if you want to go to that $4 billion in ARR, it needs to go up significantly.
It needs to start going up.
Yeah. Yeah.
Yeah, it's a tricky one, right? The stock currently, and I can pull this up, the market is not liking the reaction. However, it's not the only company that's down in the after hours right now. Although Iren is down, we're seeing Nvidia down roughly 0.8% as well. Some of the other neoclouds also down 0.5%. These are companies that haven't even shown off earnings. This is just the reaction overnight, down 1% on Nebius. So there is some of this that's baked in, but down 6.3%. Is there a possibility or is there a price where you would look to start a position in Iren? At some point, is the energy and the assets that they have worth a certain amount that, maybe under different leadership would make you want to be an investor?
And I've written this in private, but I mean, if they cannot execute, then I guess someone can come in and buy the whole thing. And then they can deploy things quicker because you buy the whole permits, you buy the whole land and all of it and all the contracted power, etc., etc. Maybe that's a success story, but I have Nebius, I have CoreWeave. They are executing, they are growing. I mean, Nebius is led by people that built Yandex, by computer scientists and mathematicians, not by finance dudes or Bitcoin dudes or whatever. So,
I mean, CoreWeave is Bitcoin dudes.
CoreWeave is Bitcoin dudes, but CoreWeave has been moving very quickly away from just Bitcoin dudes to being very, very close to Nvidia and very close to every other AI player out there. So they've made the switch, I guess, that Iren wanted to make, but as of right now, cannot.
Yeah, man, I think that one thing that they say, and he doubled down on it, and it almost makes me sick, is the commentary about it's not just about any customer. We're trying to find the right customers. And it's like, okay, well, I mean, the whole time that you're looking for the right customers, CoreWeave and Nvidia are getting paid. Or sorry, CoreWeave and Nebius are getting paid.
Nvidia is getting paid regardless, but yeah.
Yeah, they're getting paid. And you know what? 25 to 30 billion or 20 to 25 billion in CapEx. They're getting paid a lot. That's a huge amount of CapEx, which does make me think that they do have customers lined up if they're going to spend that amount. It doesn't all add up. 25 billion of CapEx on $100 million of revenue. Something must be inflecting.
Well, yeah. Otherwise, the dilution is coming, and
an unbelievable amount of dilution.
Yeah, it's a big one. Yeah. So either they really are signing a big contract with a frontier lab that could explain the $25 to $30 billion, and then okay, fine, I'll take everything back. But as of right now, it doesn't look great.
Yeah. I don't know if you were taking a look at Mrvl's earnings, or Gap right now is up 14.5%. I think that's the big winner of earnings today, surprisingly.
I saw
Affirm,
that Build-A-Bear was down 27%.
is it really?
Yeah.
Wasn't
BBW.
Michael Burry long on that name?
I don't know why Michael Burry shorted Nebius and not Iren. Like, out of all of the neo clouds, he could have chosen this guy.
Their ticker is BBW?
Correct.
Okay. Down 27% today.
Yeah. I think they fired their CFO because sales growth was down or something like that. But it was previously a very performing name.
Okay, he's not. Michael Burry's not going to be happy. Today was not a great day. Nvidia up 9%, Build-A-Bear down 27%.
What he owns a position in Build-A-Bear?
I think he's really long on it.
Well, he did buy Nvidia calls, so
he hedged it. He hedged it. Because even he knew they were going to do well.
Yeah, he doesn't trust his gut anymore. This guy's crumbling down, rightfully so.
Okay, is there anything else that you want to say to the Iren folk out there before we end up wrapping up this live stream today? I've been live since 1, so.
Yeah, I saw. No, nothing really. I mean, if I were a shareholder, I wouldn't be happy at all, because if you look at the other companies out there, everyone's executing, everyone's growing, everyone's coming with results or with big deals. And here only I hear explanations and how they're doing this and that. And like, you talk as if you are talking from a position of strength, like, hello, you are not the only one that can sell power and land and whatever. So I
don't know. If it continues to sell off and opens up much lower, I'm gonna have a hard look at this. It definitely doesn't feel like the other names that we're invested in, but it's getting quite cheap. And as a trade, that does make me a little bit interested. If they can start to inflect and show real growth, and they have the backing of Nvidia, and they have, the power, obviously, you can turn around that ARR quite quickly. Like they talked about the 4 billion of possible ARR based on contracted power. So I don't know. Definitely one of the higher speculative names in the neocloud space, which is already speculative enough. So I guess.
So you would buy this as an energy play, not as a AI cloud play, or indirect.
Yeah, I mean, I think we're going to get to a point where, and Nebius kind of highlighted this, that they will be able to work with partners to give them the software and the customers what they need is capital and GPUs. Well, that's what Iren does have. So I don't think that any company in this space, in this constrained of a market, is going to go under. They might need to pay other customers in order to get situated. Maybe that's Nebius. Maybe they end up partnering with another company. But they have a lot of very valuable assets in this AI space, and that's what people are betting on right now. If it continues to sell off, at some point, that's going to get ridiculously cheap.
What's the market cap now on?
14 billion, but tomorrow it'll open up. Around 14.
Okay, so potential acquisition target for someone that needs all of it is not that expensive. Someone did say, like in the chat, just speculation that Frontier AI Lab could just be Iren doing.
Problem is they won't be able to get, like, because Iren's been at much higher prices very recently. I don't think you can buy this company in full for 14 billion. You have to put a $30 billion offer to get it.
Why, if it continues to go down or go sideways for a while, why would you put it at double the price?
Well, because management won't take it. I don't know. All I'm saying is if I do believe that an acquisition is going to come in, there's likely a premium on that unless they just continue to sink. But I think that they do a deal with. I think they do a deal with Nebius before that happens. And then if that ends up happening, I'd rather buy it today at 14 or slightly lower, depending on where it opens up at, for that $20 billion repricing.
Fair enough.
But I don't know, man. We're now down 7.2%. Very different than the other neoclouds. CoreWeave and Nebius ended up growing immensely. I think both went up double digits after their earnings. Nscale looking to go public here soon. That's another major neocloud. And then there was another one that was looking to go public. FluidStack. FluidStack's looking to go public as well. So there'll be a lot of players in this space to compare and contrast against for Iren, which either is going to make them look even better or, much worse.
Yeah. I mean, people think I'm just disappointed because I was going into these earnings and I said it yesterday. Like Nvidia gave the perfect layup for Iren, and I thought they would come out with much better, maybe not better results, but just some better news regarding the business, maybe a big announcement or something like that. So it's more about a disappointing side of things than me just trashing this company. Maybe I might sound like this. That's completely fine. It's past midnight here, so sorry about that. But yeah, when you see the results from all the other ones, and also when you look at like Hut 8 or White Fiber and things like even these types of names somehow managed to get some deals here and there. Sharon AI managed to get one also out of nowhere. Like suddenly, poof, that name pops up, Anthropic. Like, how?
Yeah.
So
Nscale just signed a $45 billion deal with Anthropic yesterday.
Yeah.
Incredible. I think that's like 3 times their market cap. Incredible. That said, those comments, a couple people have been saying it in the chat, absolutely true. Wall Street Journal just recently reported that Nvidia is stopping their revenue sharing deal with some of the smaller AI clouds. In the article, they highlight that might bring on some antitrust scrutiny, telling businesses how they can do business. So I'm sure they might have got a little bit of a warning, and this was never going to be a large part of their revenue streams anyway. So they just said, probably better to not be under the scope of some potential SEC probes. So maybe we go about this a different way. Who knows? That's not direct commentary. This is just a Wall Street Journal article. Maybe Jensen or some of the other spokespeople for Nvidia will come out and give us some more color here. So that happened while Iren was on their call. But unless you have anything else to add, Neil, I think we wrap it there.
You can wrap it there. You've been live long enough.
Ladies and gentlemen, thank you so much for watching, sticking around for Iren's earnings, whether you come from my channel, Amit's channel, or Neil's channel. We thank you for watching. Until next time, guys, thank you all so much. Bye for now.